right. What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Mark Dutch, so good to see you in here, man. Much love to you. Thank you, as always, for being in here. Thank you for modding. Appreciate you so much. Sudeep and Samuel S44, thank you guys also for being in here. Thank you for modding for me. You guys are always so awesome. And yes, Mark, thank you so much on the 4K subs, guys. We did finally hit 4K subs on this channel. And as a community, I do think you guys are part of this community. So thank you guys all for your support with that. The next milestone is 5K. And me and BYDFI are doing a pretty big potential giveaway at the 5K or some sort of a trading competition for us as well. So excited for that and excited to keep going and building, guys. Crypto Wander 5813, thank you, man, also for the congratulations on the 4K subs. Darksby19, well, what's up, man? Welcome in. Chad P, thank you so much for being here. Mr. Wreckit-chun and Dr. X, guys, thank you all for being here. So, guys, Bitcoin is at a pretty major decision point. We knew for the past couple of weeks that there was two major zones where we could see harsh rejection. And what we've been looking at is really a couple scenarios. We have on the macro time frame, we have a bullish scenario possibility where the low is in, the bear market low is in, and we could break back up into our 2025 fair value, our zone of balance for 2025, and see much higher prices, 96, maybe even above 100K. And a bearish scenario is, which is more likely to happen in a bear market, is these corrective moves that happen where everyone gets bearish towards the tops of the moves, and then we see a big impulse to the downside, trapping a lot of that, those long positions, that hype and that change of sentiment at the very top. And so we knew for the past couple of weeks, there was two major zones that we were looking at. We were looking at our about 82.3 to 82.5K zone of resistance, because it is the pitchfork midline. It's also our one-to-one trend-based Fibonacci extinction. So pulling it from the low to the high to the higher low. That is your one-to-one target, which is very, it's the most common target. That and the 1.236 are the most common targets in a bearish zigzag retracement. Or in a zigzag retracement. I shouldn't say bearish. It could be a bullish retracement, but that three-wave zigzag correction, the targets, the most common targets, one-to-one to the 1.236. And it was also our logarithmic golden pocket. So we know that the dump from 98K down to 60K was a 38, almost a 39% dump to the downside. And with such volatility on the chart, in order to get the proper golden pocket, you do want to shift it. If you're using the log scale, you do want to shift it to that log scale setting so that you get that proper psychological 61.8% retracement, which we know is ingrained in the human consciousness, human psyche. We have now finally come up in an impulse, by the way, in an impulse from 65K up to 85K. We have finally now reached that first major target. Now, this is the major decision zone for Bitcoin. We can see here on the daily time frame, we actually are confirming very slight bear divs on Market Cipher B. NAMI does not have bear divs locally. It's more of equal highs in here. But this is one of the major zones where we could see a rejection. And what happens with this rejection here, guys, locally, is going to tell us everything we need to know really for the next 3-4 months. Because if we are going to see a slow, corrective, grindy move down, then it absolutely is possible that we could continue up to 86, 87K. Now, that doesn't mean that once we get up here, we might see that big drop to the downside. Remember, the two major targets are first that $82,500 zone and then 86, 87. So in our macro bearish scenario, we're either going to do this, or one of those two things, most likely. In a bullish scenario, though, we are going to break through probably both these levels together, or we might see a small rejection from 82K, which we already are seeing, a bounce from local support, come up to 86, 87, small rejection, flip to support, and then we're going to continue breaking up inside this impulse here, inside our impulse, but pretty much a continuation of the overall impulse to the upside. And that would be a scenario where we're looking, instead of an A, B, C, where we're going to reject and fall, we're looking for that impulse. 1, 2, 3, 4 or 5, something like that, right? So the two major targets, we're at one of them now. And the way that we drop here over the next couple of days to couple of weeks is really going to tell us everything we need to know. If we start this drop on the lower time frames, let's say the hourly chart, the 15-minute chart, if our first move down here is an impulse to the downside, then it is more likely we're going to see a deeper correction. Even if that's going to be a deeper A, B, C, where we still make a higher low, and then maybe we make some sort of double top or, 86K top and then drop. But if it is a larger time frame impulse, 1, 2, 3, 4, 5, something like that, where we see a 5-wave impulse down, then it is far more likely that this was a macro top, that yes, we might bounce from a higher low, but only to create a lower high before seeing that third wave and then, a 4 and a 5, where we would expect to come take out our 60K lows. So it's really important to understand the next couple of days to couple of weeks, what happens at the move down here, or if we make a very small move down here and come up to this level, what happens at the move down here? Because that is going to determine the next few months for Bitcoin. And so far we are seeing a pretty clear rejection from that $82,500 zone. Now, guys, this happened at nighttime while I was sleeping, and I did tell you guys that I would be looking for swing short positions from this area of around 82,300 to 82,500. Unfortunately, I am not in a short right now from the top. I did take profits on my long positions. I actually closed one completely. I still have one that has about 20% of the original position size running. Let's go ahead and zoom in now, and let's look at what we're seeing so far. So first off, before we zoom in, on the daily time frame, you can see that our daily candle body pretty much closed below the pitchfork midline at around $82,000. Yet we did see that wick up to hit that 1-to-1 trend-based Fibonacci extinction target. And then if we look at our logarithmic golden pocket, we did hit that 0.65 golden pocket, which was coming in at $82,500. Let me just move this over so you guys can see that, $82,500. So we are hitting into that really kind of dense zone of resistance in here. We also did have some low time frame order blocks. We had a low time frame range that we looked at that was in there as well. A lot of confluence in this zone. And now that we know that this was a major key rejection target, we've been looking at this target for a few weeks on the chart. We can zoom in and we need to understand the reaction that's happening from this level. So first off, yesterday when I made my video on this, I said, right now, guys, it actually kind of looks pretty good for the bulls because we didn't see too much high time frame bear dips. Now that we're looking at Market Cipher B, you can see, I guess we could even, let's pull this up full screen. It is a bearish divergence, but very, very slightly. You can see very slight confirmed bear divs on the daily time frame. But our money flow still looks pretty good here, guys. And bullish money flow will always overpower a single drive of bear divs. Another thing is we had our stochastic RSI and our RSI pegged out together at an overbought region. So that is always a sign that you'll at least get some sort of small pullback. And so I was expecting at least some reaction from this level. But the major confirmations that we would really want to see for a macro top are not the best to be looking at. I also showed in yesterday's video, if we go to that important 8-hour time frame, on the 8-hour time frame, we do not have bear divs on Market Cipher. We do have some local bear divs on NAMI. You can see from this top to this top, and it's from here to here. On NAMI, we did have bear divs, and money flow had topped out and had started draining out. So there is some intermediate time frame confirmation, but not the best of it. Generally, if it was a macro top, we would want to see like all of this being a bear dip in here. And we would want to see that money flow. Well, the money flow actually does look pretty good, but we would probably want to see the money flow top out over here and being continually draining out here. And then if we look at the 4-hour chart, another important time frame, that's that sweet spot of the intermediate time frame, kind of that day trade, swing trade level that you look, time frame that you look at. Market Cipher B, no real bear divs. Money flow still looks relatively healthy. Yes, we did top out and we're starting to kind of curve down a little bit, but it doesn't look too bad. It's starting to flatten out as we speak. Now on NAMI, we did have some better bear divs. You can see from this original kind of impulse up high. We kind of went sideways for a bit, and then another impulse in here. You can see that we do have some pretty aggressive bear divs on the chart here, and your money flow kind of topped out shortly afterwards and was going sideways and down here, crossing into the red. So 4 hour NAMI is showing a bit of confirmation that, yeah, that could have been a top, especially with that second. We had our more regional bear divs on the 4 hour, but we also confirmed a local drive of bear divs on the 4 hour there. And the money flow by then was definitely starting to come out. And then if we look at the 2 hour, now the 2 hour time frame yesterday, guys, should have showed us that we're at least going to get some sort of pullback and reaction from this level. And the 2 hour time frame, you could see market cipher, very aggressive bear divs, money flow draining out. NAMI, multiple drives of bear divs in here. And we had even some money flow bear divs in here as well. So definitely looking for at least a small pullback that could last, you know, a week or so, maybe a few days through the weekend. And we are getting that pullback. So the 2 hour gave us that confirmation to at least look for some sort of day trade to scalp trade short position from this area. If I was awake, I probably would have taken it, guys. Now I said that what's important to look at is the move down. And so far the move down, if we zoom in on, like, let's go to the 1 hour time frame. On the 1 hour time frame, I talk about this a lot on the channel. You get that sharp initial move down, and then you started to get some of that selling exhaustion coming in within that channel. Selling exhaustion coming in. It did give us a little bit of a pump, but we made a lower high. And in some ways, that was also our break in market structure, right? Because we were looking for a bearish break in market structure. And in yesterday's video, I said 80.7 was going to be a key market structure break zone. Once we started to break 80.7, then we knew a larger retracement could come. Well, on this first initial move down yesterday, we barely front ran it. It was like a double bottom of 80.7. We only got a very small move up, and then we got the market structure break right here. But you can see once we finally got that market structure break, even though it was only a wick, it is still technically a bearish break in market structure. We get the wick, we get a small bounce to VWAP, and then we get a bigger dump to the downside. It's because we kind of, in some ways, started to confirm a bearish break in market structure. So now we know locally we could be moving from an uptrend, right, from 74.9K all the way up to 85K. It was higher highs and higher lows, higher highs and higher lows. It was a bullish market structure. So the trend was our friend to remain bullish until we got up to the next major resistance. Now we are already hitting and rejecting that major resistance and starting to break market structure bearishly, meaning that, yes, we could see a continuation down, maybe that daily level. There's also an anchored VWAP from the previous range high there at 79.5. But if we do see a bounce from here, there is now, because we've broken market structure bearishly, there is a possibility of making a lower high before continuing to make a lower low and starting an impulse to the downside. So let's talk about the impulse to the downside. In a impulse, in your wave one, let me just grab this and be a little bit more organized here. Let's say we have our wave one down to the daily. We get a wave two retracement up to the golden pocket area. We get a wave three pushing down aggressively, probably taking out that liquidity trail at least down to probably 73,000, where the back test of our value area high is, of our 3 month long range, then 4 and 5. So this move down is what we're focused on right now. And in this move down, we want to see impulsive price action to the downside. And I have to say right now, it doesn't look too impulsive. It's really hard to count this as because we have a lot of choppy overlap in here. Now, there is a way to look at this as, some sort of contracting diagonal. I was trying to look for a contracting diagonal in here, and really you have to zoom in underneath the 15-minute time frame, and there's a lot of choppy overlap. So to me, this does still look like more of a corrective move down than an impulse down. But let's just say that this is an impulse to the downside for a wave one. Then we're getting a wave two, and we're in our wave three now. And remember, that's all within this first wave, 1, 2, 3, 4, 5, of a much bigger impulse that could be coming. Inside the third wave, you're looking for 5 waves. 1, 2, 3, 4. We could make a low, another new local low inside the third wave, see a retracement in a 4, and then see a 5. And that would complete this entire 5-wave structure down, which would be the first wave of a much larger move to the downside. So we don't have quite enough information yet, but it is starting to look a little bit trendy to the downside, a little bit impulsive to the downside. The only thing I don't like about it is that first move from 82.7 down to that low that is right around 80.7. I don't like that too much as an impulse. Zooming in on the 15-minute, it is really hard to look at some sort of 5-wave impulse in here because we have so much choppy overlap. We don't have a clear 3. There is an Elliott impulse structure where you get an extended wave 1. You have a shorter 2 and 3, and then a 4 and a 5, and you have a long wave 1. But that is the rarest single impulsive structure there is. And even with that, let's say what, 1, 2, 3, you're chopping in a triangle for a 4, in here, maybe a triangle for a 4. It just doesn't look too good to me. And then you get your 5 here, and the 5 itself is a contracting diagonal in here. To me, honestly, this does look better as a corrective move. Impulse down in an A wave, you have that triangle in a B wave, and then that contracting diagonal in the C wave. So if this initial part down here looks like an ABC correction, then could we be looking at all of this as a corrective move? And if we're looking at all of this as a corrective move, now that we started it with a 3-wave move down, and then we got a push up, that push up was a 3-wave push up, now should we be looking for a WXY correction? Because remember, a WXY complex correction is a series of 3-wave moves. And within those 3-wave moves, you get your, let's say in this case, a W, you get your X, and then you get your Y. Overall, you're still looking at this as an A, B, C, right? So you're still looking at mini impulses, and then you could be looking at an A, B, C here, and then an A, B, C here. So overall, it still creates a larger 3-wave zigzag move, and you will see some impulsive price action in there, but it's not like a clear, larger 1, 2, 3, 4, 5, something like that, like an impulse or a motive wave. Now, if we're looking at this being a WXY correction, we could say that first 3-wave move here, this is very short for an X wave. I don't like that. It's time-wise compared to your W, it's a lot shorter. But if we're saying this is a confirmed 3-wave move up because we broke the low, could that be your X wave? And then we would want to be looking for a Y wave, a 3-wave move that would end, and maybe this needs to be the low then, and we need to see 1, 2, and then we want to see impulsive price action to the upside here. So we don't generally want to make another low. And if we do make another low, we would have to rework this WXY where this could still be a W. We could be looking at, man, it's really hard to look at an X where you have a 3-wave move up that is not just this little price action in here. And then, of course, we would be looking for another 3-wave move down. So it is a bit complicated here. We are on the 15-minute time frame, which is like the lowest time frame you want to be really looking to count Elliott waves on. But if we're looking at, let's just say in terms of just volume, we know volume's important. Now, this move down is a pretty sharp move down, sharp move up, sharp move down so far. And on the higher time frames, if we zoom out to like the 4-hour time frame, it is looking a little bit impulsive to the downside. But it's not clear yet to me. It's not clear yet. I would want to keep making new local lows in order to get more information there. But if we're looking at our volume here, and let's turn on our volume. Let me go back to the 1-hour time frame. And on the 1-hour time frame, we are starting to get, you see, for the most part, as we were moving down, volume was decreasing on that move to the downside. Clear signs of a corrective move, right? Now, at the end of a corrective move, you often end that corrective move on a high spike in volume. So we have our volume decreasing till the very end of the corrective move. At the end of the corrective move, you get your high spike in volume pretty much right at the low. And if that's the case, then yes, we have a valid WXY, WXY count in here where we would want to start to impulse to the upside in here. And we did end that on a high amount of volume. Now, if we continue down to make new local lows, it's going to get more complicated, guys, and we're going to have to be just following the trend. Now that the market has shifted bearishly on the lower time frames, we have to make sure that we are paying attention to market structure. And if we're making lower lows and lower highs, we can expect that local trend to continue until we get down to some real support levels. To me, even this daily level is not the biggest of support levels. I do like how we have an anchored VWAP sitting right on top of that daily level. That anchored VWAP is not the cleanest anchored VWAP. So I do like to throw on anchored VWAPs from range highs and range lows. And let me zoom out to the 4-hour time frame here. So clearly this was our range high before the last week of price action, before this last impulse. We had on some exchanges, it was a double top here and like a $2 wick above the high. But on Coinbase, this was our prior high before this impulse of move up. So if we're going to continue to see bullish price action, you can see how after we pulled that anchored VWAP, we fell below it, we back tested it, we made a new low. Okay, so that was as soon as we rejected here, we at least expected a new low. But then we had some pretty key support down here, a 786. We had some liquidity. It was also the value area low of the range. We bounce, we break above it with nice volume, and we come all the way up in an impulse up to our key resistance. So if we want the overall local strong continuation to the upside, I'm talking about strong continuation like we've seen pretty much in all of this, right? Then we do want to see a bounce flipping that anchored VWAP that was acting as resistance into support. It's also a daily level of support. So, daily order block, daily level there. And so that is the first real level I'm looking at seeing a bounce from. And if we do see it continue to be corrective and grindy like this until we get down to that daily, then that tells me that, hey, we might get another push up at a new attempt at a new high. Maybe even if it's just a double top here, and we're going to see some sort of flat correction come in here before continuation. If we do start to break down below that level, and this continues to drop down in bearish market structure, we would have to start looking for some impulsive counts to the downside and potentially be expecting a larger drop down. And the larger drop down, we would be looking for overall multiple impulses, right? The main impulse we would be looking at would be to take out 60K. So it would be something like this, all of this being a wave 1, getting a wave 2, a wave 3, probably at least coming down to take out your 62 and your 65K liquidity. 4, 5, let me just scoot this over. You'd get your 3, you would be looking at a 4, and then you would be looking at your 5, probably to come down to around 58K. But this will take months to play out. If we're going to get this larger impulse down, this would at least take a considerable amount of time. You'd want to see it be relatively equal to like this move here or this move here. So, a month or longer to play out. Right now, we're still just trying to determine what is happening in the wave 1 of this wave 1 if it's playing out in the bearish mode. So there's a lot of data we need still here. And I understand as far as Elliott waves, this gets very, very complicated, guys. And all I can say here is this was a major, major rejection zone where we knew that we could be finishing a large corrective structure and rolling over and seeing a big rollover. If it's going to continue in this local uptrend from 65K, there is still real possibility because the lack of high time frame confirmation on a swing short. I would expect us to bounce relatively soon coming up here, flip this pitchfork midline into support, and then I would expect us to work our way up probably to 86, 87K. Now, it does get even a little bit more jumbled, and we've been talking about the real zone is between 82 and 87. Because we do have our non-log golden pocket coming in right where the anchored VWAP was. If this anchored VWAP wasn't there, I wouldn't really be paying attention too much to that non-log golden pocket. But because our anchored VWAP is coming in right there, we do have a non-log golden pocket, which in some ways TA is self-fulfilling prophecy. If a bunch of people are pulling a Fibonacci retracement from 98K to 60K and they do not understand if it's more than a 30% drop to shift your log golden pocket, then they're still thinking we just front ran the golden pocket. So we could still see a lot of new shorts come in up here just because we have so many people that would enter short trades at that golden pocket. I know it's really confusing right now, guys. We don't have a lot of data. We just hit this rejection yesterday, less than 24 hours ago. And we're waiting for a little bit more information locally to see what's going to happen here. But what I will say is this next couple of weeks is going to be a major, major decision point for Bitcoin on the macro timeframes, because we're either going to reject from this area, we're going to spend another week coming up to this area, reject from this area, and see nice, swift moves to the downside. And when I say swift, on the daily time frame, it will be swift. So it will take maybe a month or 2 months, but it could break us down and break all of these lows in here and make a new macro low. But if we really continue pushing up in this local impulse in a wave 3, in that 1, 2, 3, we want to see us to start to break through. We do not want it. We want to see small rejections, flips to support, small rejections, flips to support, and pretty much continuing this same sort of structure all the way up. And generally, we would want to come up to that 1.618 trend-based Fibonacci extinction. I need to clean this chart up just a little bit, guys. So we do this. And we want to be coming up, and if you guys remember that 1.618 trend-based Fibonacci extinction is coming in around 95.5, I believe it was. Oh, fix that. 1.618, 95.2-ish, 95.250-ish. So that is going to be very, very close to our range point of control, and it's also going to be where your pitchfork upper band is. And we know as far as pitchfork trading goes, if we're going to flip this midline to support, there is a real chance we could work our way up to this upper band. So we have a lot of nice confluence on the major macro levels to look for. But right now we're trying to determine whether this is going to turn into a macro rejection where we're expecting very quick and smooth moves to the downside, or if it's going to be grindy and slow and we are going to see another move up, continuing this overall structure to the upside. All right, let me check the chat here, guys. Welcome in, everybody. Thank you so much for being here. Sorry I was late today on today's stream. Kiddo had a dentist appointment that it was very important that we had to go to, and I got stuck doing it. So yeah. Okay. Yeah, please, guys, smash the like button. If you get any sort of insight into the market from this live stream, please smash the like button for me. Please subscribe to the channel. I will take a second to shout out the partners in just a bit here, but I want to go through the chat. I want to say hi to all of you guys. Let's see, Mr. Rikichan. Okay. What's up, Ryan? Keep your shorts tight, 5x or less. Yeah, so Mr. Rikichan, first of all, leverage doesn't really matter on the position, on your short. What you're looking at with short positions is you're looking at, let's say you're going to short, let's say you shorted the loss of this pitchfork midline around $82,000, right? And your stop is above this high. So now we know that I have a 1.39% stop loss. And let's say that I am looking for the big dump, right? Let's say I'm just going to bring this down. My first TP is going to be around that 73 value area high. It's a nice 7.5 risk to reward ratio. And let me pull up my calculator here. Let's say that I am using, let's say I have a $10,000 account. My portfolio size is $10,000. So we're generally risking 1% per trade, 1 to 3% on swing trades. Sometimes I'll go 2 or 3% on swing trades. But let's, just for the sake of this example, I'm going to say 1%. I'm risking 1% on this short trade, especially because I don't have a clear confirmation here. So 1% of $10,000 is $100. So $100 is what I'm risking per trade. That means if I get stopped out, I will lose $100. I'll lose 1% of my portfolio. So $100 is what I'm risking per trade. In order to calculate your position size properly, you take that 1% and you divide it by this number here, your stop loss percentage. You divide it, but because this is a percentage, you got to move the decimal over 2 places. So I do 100 divided by 0 point, let's see, 01, oops, dang it, 100 divided by 0.01393. That means that I could use a $7,178 position. That's my position size. I can make $7,178 on this trade. And if I get stopped out, I'm only going to lose $100. Now, it doesn't matter if my leverage is at 1x or 100x. If your position size is this, you will get stopped out and only lose $100. The only difference is the margin you're using, right? If you're using a 1x, you have to actually put all $7,178 on the trade, and you only have like what is that, $2,800 left in your portfolio that's freed up. But if you're using, let's say you're using 10x leverage. If you're using 10x leverage, that means that really you're putting only $717 on there of your own money, and you're borrowing the rest from the exchange. But still, whether you get stopped out, you're still only going to lose $100. The leverage really does not matter. Your position size should be 100% focused on this stop loss percentage here, and that's how you calculate your position. The only reason we even use leverage is to free up money for margin, to free up our margin so that we have more money in our accounts for other available trades. And that really comes into play when you have a stop loss that is less than 1%. So let's say you got into a really nice scalp. Let's say you shorted 82.5 and your stop is right above that high. Let's just say you were watching, waiting. As soon as it wicked up above and closed below 82.5, oops, 82.5 is right here. And you have your stop right above that high. That's a 0.32% stop loss. Now, if you have a 0.32% stop loss, now you can say, okay, I'm risking $100 because that's my $10,000 account. I'm risking 100 divided by 0.0032 because you have to move the decimal over. So I could put $31,250 on this trade. And if I get stopped out, I'll only lose $100. But Divine Hood, I don't have $31,250 in my account. You just told me it was a $10,000 account. Well, that's when you have to crank up the leverage. In this case, you would have to crank it up to at least 4x or 3.2x, right? Because if you let's just say you crank it up to 4x, you crank up the leverage to 4x. Now you actually have a $40,000 account. $30,000 you're borrowing from the exchange, $10,000 is your own money, but you have $40,000 worth of money, portfolio, margin, let's just say, in order to risk. So that is really where margin comes into play. But yes, Mr. Rekei-chun, thank you. I understand what you mean by that comment. What you mean by that comment is like, we don't have clear confirmation here, and it looks like the uptrend could continue. So we got to be careful with shorts, and I completely understand that. What I would say is if you're taking shorts without, and I'm not talking directly to you, Mr. Rekei-chun, in general, guys, if you're taking short positions and just randomly setting the leverage like to 5x, 10x, 20x based on like, okay, I think I'm going to short this, my normal $2,000 position size, but I'm just going to crank the leverage up to 10x and short it. I'll put 2,000 as my position size, but I'm going to put it on 10x. You're trading the wrong way, and that is using leverage in the wrong manner, where eventually in time, you might end up really hurting yourself or liquidating your account or hurting your account badly because you're not calculating your risk management based off the stop loss and having a proper position size. You're really just calculating the leverage based off your feeling of, okay, is this going to really dump or not? I hope that was clear, guys. I hope that helps in some ways, understanding if you really do want to be a long-term trader, risk management is literally the number one thing that I could talk to you guys about. Risk management is key, and not risking more than 1 to 3%. Let's say, guys, you're risking 1% per trade, right? And you are losing 70% of your trades, but you're only winning 30% of your trades. As long as you're taking a trade that has a risk to reward ratio of 1 to 3. So for instance, if we shorted that original one, shorting the loss of the pitchfork midline, putting it above the high, and we're looking at just a 3 to 1 risk to reward ratio, that's close to 3 to 1. You could actually lose, let's say you attempt this 3 or 4 times. Let's say you attempt this 3 times, right? You lose 2 of the attempts because you get wicked out, or you enter too early, and then upon losing it is when you get that 3rd entry and you come down and drop. Well, on the 2 losses, you lost 2%, but on the 1 win that you got, you've made 3%. So you're up overall on the day. So you could actually lose more than you win in trading, but as long as you're using proper risk to reward ratios, as long as you're not losing like 80% of them, you can still be profitable, guys. It's all about risk management, and it's all about understanding that asymmetric risk to reward ratio. For me, I try to take my risk to reward ratio, I try to keep it at a 2.5 or greater. So my stop loss, I try to keep this at a 2.5 or greater. If I see a trade, let's say, okay, hey, I want to enter this trade right now. I'm going to put my stop loss above that high, and I'm going to be targeting the daily. That's only a 0.5 risk to reward ratio. Let's say, okay, I don't think we're going to make a new high. I think the low is in. I'm getting FOMO that I'm going to miss out on the dump. By the way, I don't do this, but I want to target taking out that 74.9K low. Well, that's only a 1.64 risk to reward ratio. I would not take this trade, even if I thought that it was going to do this and come down there before coming back up. I still wouldn't take the trade because the risk to reward ratio is not proper. I would have to wait for a bounce, come up to golden pocket. If I start to see the rejection from golden pocket, now I can take that, set it up to where that rejection was, put my stop above the high. Then I could be targeting that move down there. Okay, now I have a 4-1. That's acceptable to take the trade, but I would have to wait for a rebound, a little bit of a retracement and confirmation to get in. Okay, let's see here. Dr. X, good evening from the future. Well, thank you, Dr. X. Let me know how the future is. Okay. Run Dat Mouth, thank you so much for being here, man. I'm glad you've been lurking for a couple weeks. Thank you for the kind comment, man, and welcome in here. Michael Mitzal, good evening to you as always. So good to see you in here. Ryan, what's your thoughts on the 30,000 BTC that whales loaded 2 exchanges today? Ruse or a dump? Well, it's very hard to tell whether that's a ruse or a dump. So I couldn't give you a conscious, clear answer on that with my conscience intact, but what I would say is if those whales are understanding we're in a bear, if those whales are understanding we're in a bear market and that we are coming up in macro, what looks like corrective structure to key resistances, they could be looking to offload and looking for that last leg of the bear market. So I don't want to say it's a ruse or not with certainty. I think that it is smart traders, especially some of these smart whales that actually pay attention to price action, that pay attention to technical analysis. If I had, I would honestly be ready to offload right now here as well. Actually, guys, I bought some Bitcoin at $68,500. And depending on what happens here in the next couple of days, I'm willing to sell that Bitcoin and look for a little bit either here or at 86, 87, depending on what happens. I'm looking to sell off at least half of that Bitcoin that I bought at $68,000 because I know that we're in a bear market. I know that this low didn't look like a healthy macro low, and we could get that significant breakdown here. Okay. Jojo, what's up, man? Welcome in. Mark Dutch is ghosting you. Oh, no. All right. So when does the bull market start? So according to the 4-year cycle, yeah, September, October, November, kind of in that 3-month period with October being the sweet spot. But timing, I understand that Bitcoin's very unique and it has these 4-year cycles, like 3 years of bull market, 1 year of bear market. Hold on, let's go here. That top was in October, the beginning of October. So if we're saying like a year of a bear market, October, but it's very hard to tell based off time. And like, I would caution against saying, when is the bear market going to be done? It's more like, where is the bear market going to, at what price is the bear market going to be potentially done? And really looking at the technical analysis of it rather than looking at like, when could it happen? As far as, though, to answer your question, as far as our fib time, let's go on to the weekly time frame. And actually, I'm going to go to my Binance chart because let's look at this ABC correction that I talked about. Now, I've been talking about this as one of the primary scenarios for a super cycle in some ways for quite some time, where we have that 5-wave weekly impulse, 1, 2, 3, 4, 5. It ended here because we saw a weekly break in market structure bearishly by taking out this low at $90,000. And this was an impulsive move down in an A wave. We came up in a B flat, right up to our B flat targets, right at the pitchfork midline, and seeing our C wave come down. Now, in the C wave, you do want to see an impulse, right? We do have a 1, 2, 3, 4, 5. The only problem I have with this count is this fifth and final wave. If we zoom in on this fifth and final wave, it is very hard, very, very hard to count 5 waves in there. Let's go on to the 8-hour time frame, and I'll explain. That's our move down from $98,000, right? If we're looking at this as a inside the C wave, a 1, 2, 3, 4, 5, right? So within that fifth and final wave, we do see a pretty clear, and we were going through this live as it was happening on the channel a few months ago. We do see a move down 1, 2, 3, 4, 5, or actually it was smaller. It was 1, 2, 3, 4, 5, and then we saw that running flat right here, running flat in a wave 2. And then your wave 3, all of this is impulsing, volume highly increasing on this push to the downside, meaning that this was most likely to be a wave 3. And then we don't see a 4 and a 5 in here. So there is a count with this macro 1, 2, 3, 4, 5, because you do not see a clear 5 waves within the 5th wave. Also, it would be an extended 5th wave because it's the longest wave. This wave here down is longer than this wave down, and it's longer than your initial wave down. So there is a bit of a problem with that. Now, because of that, I've looked at a WXY correction instead, but let's just say that that is the scenario and that 60K was the low, and maybe we're going to have to come in here and look at some micro 4s in here, right? Micro time frame 4s that happened. We can zoom back out to the 3-day chart, and we can pull our trend-based Fibonacci time. Where are we at here? Trend-based Fibonacci time from the bear market low to the bull market high. And we look at that. Oops, let me redo that. Hold on. I'm going to go to the weekly to make this easier to click on these guys. So we have passed the minimum target zone. So the 0.382 is your minimum time target for a corrective move. But generally, if we're seeing 3 years up and 1 year down, then that is about 66%, 0.618, right around that 0.618. You could say the low is in. Well, the rejecting here and dropping, you know, say this is that 3-wave move up, reject here, one more low after that 618, right around that 618, which is in June-ish, towards the end of May, June. Maybe that is going to, you know, something like that is going to be the bear market low in there. It's really hard to tell. Okay, and then if we're looking at the other scenario, let's go back to the daily time frame, and we're looking at a different scenario here. Instead of an ABC here, we're looking at the bull market being done at 126. Guys, just because the 126 is the all-time high doesn't mean it's the high of an impulse, because you do have flat corrections that will go above the high of the impulse. In a flat correction, you can see that. So, but let's say 126 was the high, the bull market high, and all of this has been a bear market. We've been looking at another scenario, the WXY scenario, a larger time frame WXY to the downside. And inside the WXY, you're looking at, remember, a WXY is a series of 3-wave moves, right? It's in this case, a 3-wave move down, followed by a 3-wave move up, followed by another 3-wave move down. That would be the WXY correction. So we do see in here a pretty clear 3-wave move down for the W. We see in the X wave a pretty clear 3-wave move up in the X. But in the Y wave, we have one giant move down We didn't have the move up yet. So is this the move up? And then we're going to get one more move down, right? Or move down, right? Like this. So, and this whole thing is from 98K to whatever this new low is going to be is your Y wave. Now, yes, the Y wave would be extending in time a little bit compared to like your correction in the X wave, but, or inside the waves, right? But time is not an invalidation. It just lowers the probabilities. So there is still a very, very real scenario that we're not done with this Y wave to the downside, and that this was the first move down, this was your corrective move up, and then we're looking for another move down to create that overall Y wave. I mean, guys, this resistance here is super, super key. Log golden pocket. We have, if we look at our bearish pitchfork pulled from the all-time high, it is your pitchfork midline from the bearish pitchfork pulled from the important all-time highs in 2025. And if we look at our macro cycle pitchfork where we rejected from the midline, we're now bearishly backtesting the lower band. And I'm telling you, this is an area where we could see massive rejection to the downside. I'm not saying it's guaranteed. I'm not even saying there's proper confirmation for it right now. Like I said at the beginning of the stream, I don't see the exact confirmation for a macro high yet. But this area, this general area in here is really, really important, because if we are going to continue the bear market and create a new macro low, you would expect it to reject within this general area, right? 82 to 87K. So, and the way we moved up, guys, I have to say the way we moved up, I still think, even though contracting diagonals are low probability, there is a valid count for a contracting diagonal in here. We got our 3-wave corrective move down here. And this move up here so far is a multiple impulse, multiple 1-2 impulse that could be coming towards an end. And that would give you that bigger ABC correction. It gives you that overall. In a A wave, remember, in an A wave, you're looking for some sort of motive wave. Well, a contracting diagonal is a motive wave. Within your B wave, you're looking for a 3-wave zigzag correction. We have that very, very clearly. Also, in a contracting diagonal, you usually dump in your retracement to at least the golden pocket, sometimes the 786 and the 886. But where did we bounce? We bounced at the golden pocket at 65K. Then in your C wave, you're looking for another impulse. And this is impulsive in here so far. Could it be finishing up, guys? Could we maybe even see something like this where it one more little peak up there? But overall, this entire structure is still intact until we get one more little micro high, and then you see the big dump. It is just such an important high time frame backtest right now that we're seeing. High time frame backtest of multiple macro pitchforks. And guys, I am telling you, these pitchforks, if you don't believe me, these pitchforks work wonders. Like, all right, let me get rid of this stuff here. This multi-cycle pitchfork was pulled from the COVID lows up to your 65K highs, which was, as far as volume and money flow, was the highs of the bull market, down to your bear market lows. And I mean, if you want to see if these have been respected, rejected at the lower band, rejected at the lower band, rejected at the upper band, flip it to support, hold it as support, move your way up to the midline, reject midline, move down to the lower band, bounce from lower band. You tried to break above it. This was distribution. It was a very clear distribution range. I made a video about it ahead of time before we ended up distributing. And then we break up again, rejection, and then we create another distribution range right here. We break down. We've now lost that lower band. We're back testing it. If we reject here, you would expect to make a new low. And it could do this too, guys. It could reject from the top of the lower band, and you would expect to make a new low. So very, very important. And I'm telling you, these pitchforks on high time frames do work for a while. Now, when you zoom in, if you look here, you would be saying there was 1 week where we were like closing actually above that pitchfork. Let's just go into that circled price action there. And yeah, you sometimes form ranges, right? And I, just like I said on the last live stream, maybe we're going to form a range, but you can see up here, it's like, oh, we were in a very clear uptrend. Just imagine this is the 74.9K low. We're in a very clear uptrend, right? You get that small rejection. You start moving back up. Oh my gosh, the low is not in. The pump's going to continue. The pump's going to continue. You see a 3-wave move here, making a lower high, and then you make new lows, right? But the point is we ranged in here for a bit before seeing that big kind of dump to the downside. So at these macro pitchfork levels, you don't often just hit it once. You don't often do this where you come up, you hit it, you reject, and you go right like that. You generally start to form a lower time frame range at that resistance. And that's going to tell you whether you're going to continue down or not. And that's exactly what we're looking at right now. We're seeing that at this level over here, are we going to form a low time frame range from this area where you could possibly make one new high within the range, right? We have our prior highs. Let me just do this. We have our prior highs coming in here, and we have our resistance, which is moving upwards with every day, right? Moving upwards, moving upwards. Do we form a bit of a range in here where we make some new local highs, but overall still reject from this resistance zone and then see that big dump? I mean, it's very possible. And guys, if we start going sideways like this and we make a new high, that's going to give us those bear div confirmations that we want to see. That could now let us know we have enough information to look for the swing short. Like I said, I probably would have taken it if I was awake. Macro important resistance where we're at now, guys. And a lot of people, once again, just like this range at from 80,000 to 98,500. What did we see last time, guys? I remember this so clearly, especially in this last move up right here. We saw the entire Twitter universe getting so bullish. New all-time highs are coming. Oh my God, bear market's over. Here we go. I told you 80,500 was the low. It's not going to be broken. And look at that 80,500 low looks very similar to this low. And you know, they say, okay, it's going. So many longs entered in here. It was used as fuel to get that big push to the downside. Well, I've seen the same exact thing here. In this last push up from 74.9K, we've had a lot of long positions get hype, and a lot of people get hyper bullish in this move up here. Now, could it absolutely keep going, guys? Yes, I'm not saying that it's not likely to, I'm not saying it can't happen. I'm saying we're in a bear market. Emotions are starting to get euphoric for the bullish, that the bear market's over, that, you know, now we're going to run up to new all-time highs. I'm starting to see a lot of hype on Twitter, on these different places. And this is where we need to let our emotions subside. We need to shut off those emotions, look at the technical analysis and say, what is most probable? What is most probable? Are we going to see this as a 1-2 and this 3 is just going to continue here? Well, there's so much choppy, crappy overlap in this thing. I mean, to me, it's not likely we're going to continue like all this and then just, you know, it's less likely to me. Now, does that mean it's not going to happen? No. To me, the higher probability, especially because we are in a macro downtrend, right? Macro downtrend, lower low, lower high, lower low, lower high, lower low. Could this be a lower high before making another lower low? Absolutely. To me, it's more probable that we are going to see a rejection. I'm not saying from this exact high. I'm saying from this general zone, you know, even up to 87, from this general zone of where we're at now to 87,000. Another thing to look at, as we've been ranging, as we've been forming this sideways and up range, this zigzag correction here, one of the ways to know that it's a correction is if this was a wave 3 impulse to the upside, you want to see volume spiking as you're getting higher and higher and higher in that impulse. You want to see your volume spike. But look at what we're seeing here. We see the spike in volume at the end, and volume has been decreasing here. As we've been moving up, we are moving up on decreasing volume. That is a clear sign that it could be a corrective move. A lot of warning signs here on the chart. If we go to Coinbase, now on Coinbase, I like Coinbase volume levels the best. You can see that, yes, it still overall kind of is decreasing in here, but we do have some nice spikes of volume within it. But overall, it's guys, it's a warning zone, right? If you're long from 65K or if you're long from the flip of 70K, it's a real warning zone to pay attention, to maybe start taking some profits. Don't let your greed get too much. If you're at macro resistance, at least lock in something, guys. If you break above it, you start to flip it to support, you can add and you can compound. Okay. There's a CME gap down by 67K. I think with them going 24/7 by the end of the month, they may close those gaps. Yeah, those CME gaps, man. And we did also just fill a CME gap on to the upside that we had for quite a while. So you can see the CME gap. I guess, you know, the wick has been filled, but the candle body is closing at around 84,000. But you can see this gap, the CME gap that we had in here that is, you know, in process of being filled or filled there. CME gap at 67 here. Let me go in. Yeah, we do have that CME gap down there. Right in here. You can see that CME gap. Actually, that's really nice too, because look at that liquidity. I mean, yeah, it's pretty nice. If you remember at the start of this impulse a few weeks ago, let me get back to the regular chart. In this impulse from a few weeks ago, this was the move up that Tuesday that Trump had the deadline of annihilation of a whole civilization and da-da-da. And then there was a 2-week delay. That was right here. And honestly, guys, in this move up, we had seen overlap between the high here and the low here. This was the first time where we don't see overlap between the highs and the lows. It's a very small gap, but that's the first time within this move up that we don't see overlap. Then we get that sideways range, flipping that important 2024 value area high and the pitchfork band to support. And then that's when you see impulsive price action to the upside. What I would say here, impulsive price action, this is a contracting diagonal in here, corrective move down. Impulsive price action, corrective move down. Impulsive price action, corrective move down. Impulse. All these moves up are impulsive. And here, this was a bit weird here because this is largely a very clear 3-wave move. And even in the B wave, if this was an A, you see you have your flat in the B, C, A, B, C, but we still continue with bullish market structure. So this, I have to say, this impulse from 65K, it doesn't look like a classic impulse. It looks very, very messy with lots of choppy overlap. But overall, if you zoom out on the higher time frames, it's a pretty clear trend to the upside, like this channel, right? This very clear channel to the upside. So, and I actually have that channel on the charts. We did break below it. No, not that guy. That's a different one. I could show you guys later, but this guy here, right? I pulled it from these 2 lows up to that first big high. We were chopping around in the channel. We rejected from that prior range high. We lost it, back tested, made a new low, but then we kind of were hitting into the channel, hitting into it. We finally got back in. So I guess we're now starting to lose it again today. And actually, this is interesting. I want to go in on the lower time frames because the big move down that we saw today was a bearish backtest of that channel. So let's go look at that 1-hour time frame. Yeah, I guess kind of. You could see how we were coming down to the bottom, bounce, bounce, reject VWAP, breakdown. The big breakdown of the day was when you finally broke that channel structure down. If you pull a fib from 60 to 83 on the daily, the POC, wait, if you pull a fib from 60K to 83K on the daily, the POC, the golden pocket fall right at that 67K gap. Okay, I see what you're saying. You pull a macro golden pocket of this entire impulse. Oh, from 60K. Okay, of this entire corrective range. So if we're going from the A wave lows up to our highs, yeah, 67. That's very interesting. And also look at this, Crypto Clan World. Very, very interesting because if we reject from the midline and we see a real rejection from the midline, you might come down to revisit that lower band. I actually covered this in yesterday's video. I covered this in yesterday's video because yes, if you do pull that volume profile, oops, what am I doing? Actually, I have the volume profile. If you pull that volume profile, I showed this in yesterday's video. POC, I believe it was, if you pull it back and just look at this price action. Well, okay, not exactly aligning there. Maybe on a different exchange it was. I think I might have been on that Binance exchange. But yeah, very interesting level. What I would say, if we do retrace down to 67K, the bulls still have a chance. Remember, we have to talk about the different kinds of impulses there are, right? Your most classic impulse, 1, 2, 3, 4, 5. Extended third wave. But there's also, which is pretty common in crypto, is a double 1, 2, where you get a 1, 2, 1, 2. And generally your primary 1, 2 is larger than your secondary 1, 2. And then you get your third wave extends, and then you get the 4, 5s, right? Starts out kind of in this channel, ends kind of in a channel here, right? So if we do pull back to 67K and make a higher low, you would have to say this is a wave 1, 2, a secondary 1, a secondary 2, and then you would want to see that big 3. But there is a problem with that as well. Your secondary wave 1 and your secondary wave 2 would be larger than your primary 1 and 2, which lowers the probabilities. So if we do make it down that low, it's more likely that we're seeing a 1, 2, 3, 4, 5, maybe a bounce from there, come up to golden pocket, make a lower high, and then you're seeing a third wave to the downside, and then a 4, and then a 5, right? And you're looking at this whole thing being a 1, 2, 3, 4, 5, something like that. So I wouldn't want to come down that far. If we do come down that far, I would still definitely look for a long down there, but I would probably be looking to take profit at a lower high, golden pocket 786, wherever there's confluence, and I would be looking to add to a short. I'm looking on Coinbase, but I use the visible range volume profile. Okay, so you're probably, if you're looking at the visible range volume profile, you're probably have some of this price action in there, or the visible range volume profile shouldn't change much if you're looking at it from the 60K lows. But thank you, Crypto Clan World, for that that information there. Clear bear flag. Okay, Biggie Johnny 1719, welcome in, man. I understand what you're saying by bear flag, because we could have said this, hey guys, this was a bear flag. Pull down, you have your flag up, and then you crash it down, right? And it does happen where you see multiple bear flag type structures in bear markets. Let me just zoom out here. And like in the last one, right? It's like in the last bear market, big pull down, flag, another breakdown, another bear flag, another breakdown, another bear flag, another breakdown, right? So I get that. But the one thing that's a bit different with this is, now this is taking into account pattern trading a little bit and looking at time and volume, okay? So in a bear flag, if you have your pull to the downside, your flag you don't want to be 2 times longer than the pull. So for instance, in this one, we can take that Fibonacci time, trend-based Fibonacci time, and we'll go from the highs of the flag to the highs of the pole to the lows of the pole. Okay, and you can see here how it's at the 1-to-1 time. It's here. We make one more local high, but it didn't even hit the 1.618. That's actually kind of your limit. 1.618. If your flag is more than 1.618, and 2 is like the maximum target. If it's 2 times longer than your pole, it's unlikely to be a valid bear flag. Now, you can see on this example, we rejected before even the 1.618. We rejected shortly after the 1 Fibonacci time, and then we crashed, right? Let's go now look at it on this one here. So if we go from the flag or the pole high to the pole low, you can see we're already pretty much to the 4 Fibonacci time. So it makes it far less likely that this is a bear flag, because your flag is just getting so much longer than your pole. But I understand structure-wise, Biggie Johnny, it does look like the classic bear flag that plays out in bear markets. Wow, we're starting to see a bit of a dump. Hold on, guys. I want to look at this. What are we making a new low? We haven't made a new low yet. Honestly, guys, if we're looking at a WXY, W, small x, and then a Y here, you do not want to make a new low. You want this to be a 1, 2, 3, 4, 5, a 5-wave move up. and you would probably want to break, well, you would for sure want to break this lower high, but I would want to at least break this lower high too. Okay. TXRX, welcome in, my man. Jojo, thank you for the congratulations on my high body count. I love it. I love it. Yeah, please, guys, please do subscribe and hit the like button if you did get any sort of insight into the market from this live stream. I know we haven't covered a lot locally, but this is, I have to say, this does look corrective to me so far. But it does, we're at a macro resistance, guys, and I'm just worried this macro resistance here, multiple pitchforks, multiple high time frame pitchforks, multiple your 1-to-1 trend-based Fibonacci extinction in your log golden pocket. A lot of people longed from 74.9 up to 85K, 82.5K. And this could be, I mean, we have so much longs. Let's zoom out onto like the 4-hour chart on our order flow. And in this move up, hold on, where are we at here? I mean, look at this move up from 74.9K. Look at how much long positions entered. So first off, your CVD is cumulative volume delta. It's pretty much just a fancy term for market longs and market shorts entering. When your CVD is going up, that means longs are entering into the market. When your CVD is going down, that means shorts are entering into the market. Now, in order to tell if those are new positions, because we want to have new money entering, right? A healthy move has new money. Well, look at in this first big move up here, a lot of longs entered. They were mostly brand new long positions opening up. So a nice, healthy move to the upside. And then we got a big dump. Now, Bybit is actually even a bit worse than the other exchanges because of this giant wick that happened that didn't happen on any other exchange. But for the most part, healthy move to the upside. So new positions opening up, and almost all those positions were long positions all the way up into the highs. So in other words, out of this entire impulse from 65K, we saw most of the long positions opening in here. A lot of longs could be trapped near the top, just like in this move right here. All those open interest longs that entered in there, and I would have to kind of show, oh, Jesus Christ. A lot of longs were entering in there. In this little zone here, you could see it was mostly new longs coming in. Here. So it's a classic thing we see all the time from the market makers, guys. Let me just refresh this. All right. Yeah, I want to take a second here to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you do deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. And guys, we're trading USDT on the futures contracts market. So just by trading USDT, it doesn't even have to be against Bitcoin. It can be against the altcoins as well. Just by trading on the exchange, depending on the amount of volume you move, you can earn up to $8,100 extra rewards paid out in real Bitcoin or real USDT. So in my opinion, that's great. A really good incentive there. And then they're offering some of the best initial deposit bonuses of any exchange in the industry as well. So if you deposit $100, you can get a 50% deposit bonus. They're giving you 20% deposit bonuses up to $1,000, and they're giving you 10% deposit bonuses up to $20,000. So if you deposit $20,000, you get a $2,000 bonus. That's pretty good in my opinion. It's double what most exchanges will do. And I've also partnered with BYDFI to create a Telegram community where I do try to keep you guys updated in that Telegram community on any trades that I'm taking. I try to let you guys know where there's important support and resistance levels, where there's important places to look for bounces. I also will let you guys know if I'm seeing confirmation to enter a trade or not. That Telegram community is free. all you have to do to get into it is you join BYDFI using my affiliate link, and then you have to make a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger rewards. The money that you deposit in the exchange, you're not paying that to me. You're not paying that to BYDFI. That is your money. You can trade on the exchange with it. You can withdraw it if you want to, whatever you want to do. That's your money. You're not paying it. It's just we're having you guys deposit it on the exchange in hopes that you will try out the exchange, like the good fees that it provides, like the good order book, like the UI, and end up using it as one of your primary exchanges. So if you're interested, join BYDFI using my affiliate link, deposit the minimum amount. Once you've done that, you click the Telegram link in the description of this video. And in that Telegram channel, you type in /verify and then your user ID, your BYDFI user ID, and that'll get you into the Telegram. And once you're in, guys. Okay, second partner of the channel is another non-KYC exchange that I'm partnered with. It's Blowfin. And Blowfin is offering up to VIP 1 for 30 days. If you deposit just $5, you can get a $10 voucher. First 300 users only, and they're giving some pretty good initial deposit bonuses as well. You can see 20% on $100, all the way up to, if you deposit $10,000, you can get $1,000 of a futures bonus. I have two KYC exchange partners. They are MEXC and Bybit. MEXC is offering a 10% deposit bonus up to $1,000, and Bybit's offering up to $30,000 in futures trading bonuses. And then the last partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator you see on the bottom of your screen here. And I use it for confirmations to enter a trade. For instance, as we were finally coming up and hitting this purple box of resistance that I've had on the chart for weeks, this has been a key level for weeks. If you guys have been paying attention to my channel, you know that. I would want to see bear divs. You can see we have multiple drives of bear div. We have the money flow bear div in here. So I was asleep when this happened, but just based off the 2 hour and under bear dib, I would have probably attempted at least a one short that I would play it as a scalp to start, because we've been in a very aggressive uptrend. I would play it as a scalp to start, but then you could leave some of it open to be a swing just in case we actually do reject fully from here. So I use NAMI to get in and out of trades for confirmations whether to actually enter a trade once we get to one of my key levels. If I see bear divs, like see this first drive of bear divs here on NAMI that printed here, we just kind of went sideways here. I want to see it at a resistance level. This was not really a resistance level in here. So I want to see it at a resistance level. So once we get to that level, it's my confirmation to enter or exit. Since I've been using NAMI and Market Cipher B for confirmations, my profits have gone up drastically, because it gets me into the trades that are more likely to play out, and it also gets me out of the trade when I know that it could be reversing. It's just greatly helped. It's a great tool for me, guys. If you're interested, I have partnered with NAMI Trading to get you guys 50% off. So if you want NAMI, you have to go into the description of the video and click on NAMI's website. And once you're checking out on the website, if you type in Divine50 in the checkout box, the promotion discount code box, then you will get 50% off. All right, let me get back to the charts here. I know that I passed a lot of comments, so I'm going to read some of this real quick. You didn't pull the trend-based fib from the bull market high. You put it on the high January. Yeah, Anthony Lee Crypto, the reason why I put it on the high of January, because that was the end. In that scenario, it was the end of the impulse. And that high at 126 is part of a B flat correction. So in the case of, if you're pulling your, and it was a time-based fib. So if you're pulling that time-based fib, you're looking at the impulse, where the impulse finishes. And then all of this is part of a correction. It's part of a flat correction. So that's why you would want to pull it to that high. Now, let's say that you are considering this to be the high of the bull market. This was all part of maybe a double 1-2 impulse. Then you would pull a trend-based fib from the lows to the actual high, the all-time high. And then you would be looking at, we haven't even got to the 382 yet. So that would be a minimum in November, guys. And let's just say if Bitcoin pumps for 3 years and dumps for a year, We could be looking around that week of November 9th, the first week of November, where we could see that macro bear market low come in the end of November. And then, you know, what I would expect then, if we're going to do that, I would expect that accumulation, right? Reject here, make a new low, come up here, maybe towards the highs, come down to the golden pocket, and then that's your inverse head and shoulders, right? Left shoulder, head, right shoulder, or it would be your model 2 accumulation. Tap 1, tap 2, tap 3. This is your accumulation range, and then you would expect to see a breakout and expansion. So either way, November. And I am sort of looking for accumulation down here, guys. Could we come up a little bit higher and then still see accumulation? Yes, we could come up to 87 and reject from 87. Okay, what if it drops under the last fork, a pitchfork line, just to act like a fake drop, and then it goes up to fork? Will we be able to say the bull run is back? Rajas 7, I'm not exactly sure what you mean about it. Like, what if it drops under the last forks line? So that this pitchfork, if it drops under the last pitchfork line, just to act like a fake drop, and then it goes up to fork to the next pitchfork level, will we be able to say the bull run is back on? You do see fake outs of pitchforks. Like, for instance, here on the upside, right? We busted above it, and we even flipped it locally to support and then made a new high. But this was a distribution range. And by the way, in that distribution range, let me circle this, and then we'll go in onto the daily time frame, and I'll show you. I made a video. If you guys go back in my type in my video, Wyckoff distribution, you'll see this video will come up. And I was calling this before it actually happened, based off of, by the way, my confirmations. At that time, I didn't use NAMI yet. So I was looking at Market Cipher B. But in this move, we broke above the midline, initially backtested it, made new highs, 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 right? But then once we lost it, reject, 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 new lows, bearish market structure, right? But as this range was forming above, we were seeing some local flips to support, local highs coming in, but we were still forming a sideways range in here. And as that sideways range was forming, we had very clear bear divs on the chart as this was forming. Then we created another high with even more bear divs overall. You can see all these bear divs coming in. Money flow was topped out and draining out as the range was forming, which to me is a clear sign of distribution. So multiple drives of bear div, money flow draining out as the range is forming. You can see as soon as it crossed into the red, let me do this. As soon as it crossed into the red, that's when you lost your pitchfork midline, backtest, 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 and you get the big distribution to the downside, right? So yes, you do see fake outs. And it, like, if you see a fake out, it doesn't, like, for instance, in your scenario, could we come down on the weekly time frame, see a bit of a drop maybe to 54K, right? Because 54K, 53, 54K is another kind of important support. Get back in, chop here for a bit, and then see a big move up. I would say, yes, that's possible. It could be the next low. I think, for me personally, the next macro low we make on the charts, I think is probably going to be the bear market low, in my opinion, if we even make another one. But I'm in the camp that we are going to make another new macro low. I like 54K. I like 58K. If we look at our ranges based off the fair value of Bitcoin, we know that Bitcoin, hold on, let me hide some of this stuff here. We know that Bitcoin likes to range and find zones of balance and then trend, and then range and find zone to balance and then trend, right? For 2024, the fair value for Bitcoin for most of 2024 was in this range. We broke above it after Trump won the election, and we established a new zone of balance for 2025, a new range. It was all up in this upper range. I call this the all-time high range. But once we lost this upper range, we fell back down and we bounced directly from the value area low of 2024's range. That's exactly where our low was, at the value area low of 2024's balance zone. Do I have that? Where's that at? And because of that, you can see previous range, value area low. That is exactly where we bounced from. If you zoom in on the daily, the value area low is right there at 60,200. But when you start to break back, so we had this upper range and we fell down and we started to break back inside of this range. And we started to range back in there for like almost 2 months, right? So what you can now do is you can take this previous range and this range and you can combine them together because you're now starting to reestablish back in the old range. And that is when let's just turn these off. That is when you can pull that macro range. Let's see, where's it at? Of the 2 years, right? Of both of them. And you can see that we are, the value area low of that macro range is right around 54. So I think 54 is going to be an important level. We also have a weekly down there at like 55, 54.8. So I do think that's another really kind of important zone. We are above the POC of the range now, guys, and there is a real chance we could come up to the value area high. Here's the thing. We have 2 macro scenarios. We're in the ABC where we're going to reject now from 82 to 87, right? Either the ABC where we're going to reject now and we're probably going to go visit 58 or 54, or if the bullish scenario plays out and this is a 1, 2, 3, well, where does your 3 go to? We're likely to come up to value area high. That's also the 1.618. That's also the POC of this upper range. Right? If we turn on just that upper range, it's also the POC of that upper range. It's also our bearish pitchfork band, our upper band of the bearish pitchfork. I mean, there's so much confluence for these macro zones, guys. There's no coincidence here. We know that there's one of 2 scenarios that's going to happen, the bullish or the bearish scenario. And I get what you're saying. Oh, you're telling me it can go up, or you're telling me it can go down. You're telling me it could be bullish or bearish. That doesn't help at all. We don't know as traders, guys. We don't know what's going to happen. All we can do is be prepared for what does happen. Once we get here, if we see confirmation, we look for the shorts and we expect that we could get a big dump, meaning you're going to hold that some of that position open as a swing short. If we start to break through it, the next big swing short could be up in this area. We just mark out the levels and we trade. Me personally, I'm a reaction-based trader. So once we get to the level, that is when I'm determining whether I want to take that as a swing or a scalp at first, that I'm going to leave some open just in case it becomes a swing. Okay, what are your thoughts on this being an expanded flat correction? We would need a reclaim of the high time frame structure, obviously. Yeah, I think I just covered that a little bit, where this is an expanded flat, an A, B, C, you have your expanded flat. If that's an expanded flat, you want to see an impulse from here. 1, 2, 3, you'd want to see an impulse, right? 1, 2, 3, 4, 5. And yes, you would want to reclaim 98K. You would want to start to break market structure bullishly by taking out 98K. Now, in an expanded flat, let me go back to the Binance chart where I have that on the chart. In that expanded flat correction, after you end in, especially an expanded flat, right? Not that one. Where did you go? Did I delete you? A wave. B flat, you came right up to your flat targets, 1.382 to the 1.236, your C wave. Okay, if this wasn't an expanded flat correction on the weekly time frame, high time frame expanded flat correction after finishing a 5-wave impulse, because this is a scenario I've had on the chart. Go back and watch my videos really from months ago. Here, after the C wave ends, you're expecting impulsive price action to the upside. 1, 2, 3, 4, 5. But oftentimes this move up will move all the way up to take out the all-time highs. It will move all the way up. You can see a big, all of this 1, 2, your 3 could come all the way much higher than the 1.618, could maybe come up to 110 where the value area high of this range is 4, and then you get a 5 and you come up and you break above that all-time high. Or it doesn't have to be in one big impulse. You could also see it like a 1, 2, 3, 4, 5. Then you get a 3-wave correction down to golden pocket, and then you get your big 3rd wave, and then a 4th, and then a 5th, and then you end here, you know, somewhere up here. But your bottom line is, after this expanded flat finishes, you want this to be impulsive. Okay. Guys, I will say this. A lot of altcoins are starting to kick off. If we look at Near, now I had an alert on Near. Let me go to the 4-hour time frame. I've been looking at Near a lot because I had an alert on Near at the highs, at these range highs here. Let me hide some of this stuff I was just doing. We have this sideways range that goes for a while now on Near, this sideways range in here. And one of the things that I was looking at was some sort of flat in here. If we SFP this high, this range high, and it looks like the move is going to be a impulse here, 3-wave corrective move, and then an impulse here. That is after this move down. This could be a flat where it comes all the way back down to take out your range lows now. So I got the alert on it. I did enter a short from around 150.5, but I took a lot of profit on that short based off what's happening here locally. Because this does look kind of corrective here, and we're back testing that pitchfork band. But you can see this was an SFP here, a very clean SFP. At first it was. I looked at it even a little bit late, and I was looking on the 4-hour time frame. But moving up, breaking out of the value area high of the range. So if you have an asset that's clearly impulsing up, clearly breaking out of the value area high, the next level it's going to reject from is that range high. If you don't reject from here, then you're going to continue up a lot higher. It's going to be more likely to be an impulse, right? A 1, 2, and all of this could be a 1, 2, 3, 4, 5. You're going to see a much bigger 3rd wave continuation. I know I ran out of real estate there, but so I am looking, because this was a very nice move on the daily time frame. That candle was a very big bullish engulfing candle. Look at that giant bullish engulfing candle that we saw yesterday. We are at the pitchfork band of resistance, but if we can flip the value, if we come down to value area high and hold it, we might be able to work our way all the way up to the top of the pitchfork where this liquidity is. And it could happen very fast, because we do see giant pumps on these coins like this. So it could go like something like this very fast. I would be looking for a short around those highs. I don't know why it's there. It should be there. I would be looking for a short around these highs up here. But if we backtest this 142 level and hold it, I would be looking for a potential long. So it looks pretty good for that. Near does. Also, ZEC, guys, I'm still in the long position, by the way, on ZEC, but I've taken at least 75% profit on it now. ZEC, we've been looking at a move from, where was it? I think it was this low here. We were looking at an impulse. A 1, 2, 3, 4, and right in here, we came right down to that 0.5 Fibonacci. So if we look at our trend-based Fibonacci extinction, and I covered this in depth at, I think, last week's stream, so if you want to see that. But if you're looking at your wave 1, your wave 2 pullback, and you're looking at that trend-based Fibonacci extinction, you pretty much came right up to that 1.618 and the pitchfork, the top of the pitchfork band. It did front run it just a little bit, but then because it came up so close to that, and this looks very clearly impulsive, I was looking for a pullback in a wave 4 to around the 0.382 to the 0.5. So if we pull that and we look at that those wave 4 targets, you can see that our wave 4 targets, and I think I might have had that on log scale. No, it wasn't, because we hit the 0.5. At 303, we hit the 0.5. I longed this about 309 because I started to see us bouncing from this level. Now, if you go back and watch last week's stream, we had a very key resistance in this purple box where I was expecting a big pullback. It was a naked weekly point of control. It was our golden pocket. It was the value area high of the range. I deleted all this stuff now because it's irrelevant. Or it was the POC of the range. It was a golden pocket. It was a naked monthly point of control. Something like that. I'll have to go watch last week's stream. But I took some profit here, and then I re-added to it at the golden pocket again. If you pull that Fibonacci from this high or low to this high, we look at the golden pocket. That's where we came down to. We did wick past it, but I added to it here because I was already comfortable from down here. And then we just impulse like crazy. And so if we're looking at this whole structure being a larger 5-wave move to the upside, 1, 2, 3, 4, and we're in the 5th and final wave, we do know that altcoins do like to have those blow off tops, an extended 5th wave. It is very clear that this so far is not done. Wave 1, wave 2, we're in the wave 3. We could be seeing a pullback in a wave 4, and we could come all the way back down to 480, 478. And then we could see that 5th and final wave to come up to 690, 700. So, and that would end your overall 5th wave, right? Because you want 5 waves in here. So far, we only see 3. 1, 2, 3, and we're developing the 4th as we speak. But very, very nice explosion on ZEC. We look at the money flow on the 4 hours, still really bullish. No bear divs on the chart. Go to the 8-hour chart. Pretty bullish money flow, no bear divs. No bear divs, no bear divs. Go to the daily chart. Daily chart, money flow, extremely bullish, no bear divs. No bear divs, extremely bullish money flow. To me, it's likely that we could see a small retrace over the next couple of days, maybe a week, down to 480, at the very least 480. I mean, not the very least. I shouldn't say very least. If we go pull our Fibonacci retracement and we look at our wave 4 targets, 382 to the 0.5. So depending on how long this takes, this should take around this amount of time or a little bit longer. So that was 5 days. So I would say 5 to 20 days. In the next 5 to 20 days, if we can move down, see, this is it, the 382 is going to be in alignment with the pitchfork level at about, oops, wrong. Sorry, guys. 10 days, 10 and a half days into it. So if we can range for a week and a half or so, that might be a really good long, 496 there. We would have the time that is equal to or double to this. Nice confluence there. 1, 2, 3, 4, and then we get that 5th and final wave up to $700 or higher. You know, depending on time-wise, this is going to be coming up to 740-ish, 730, 740. And the money flow just looks so good. So small pullback may be possible. And remember, in the pullback, we want to see a 3-wave move. It could be a lot shorter. It doesn't have to be 10 days or 8 days. It could be a smaller pullback, and then we just go. But ZEC to me, man, it just looks good. Yeah, it looks good. Of course, you don't want to, we just rejected a lower high golden pocket. Let me zoom in on this. So I'm looking for potentially a new low. What I do like about this is this does look like a 3-wave corrective move. You do have a very small 3-wave corrective move in here. So could we get another 3-wave corrective move to take out that low? And then this would be that channel structure. And you long into the bottom of the channel, grabbing that liquidity. And then you would at least expect to take out this high. There's a lot going on with ZEC, but needless to say, I'm looking for longs. And if we do hit into, so like if we get a long scalp long that could turn into a day trade or swing trade long, I'll let you guys know that if I enter it. But just based off this small correction we're seeing so far, our 1.236 is pretty much in perfect confluence with that 382. So if we see something like this, you know, coming down into that 382, like around 498 to 496, let's just say 496 to $500, you might get a nice impulse up from there. Okay, let me continue here. I'm going to scroll down to the bottom. Guys, give me just a second. I got to get a drink of water. Okay, Leo, 77.7 would be nice on Bitcoin. Yeah, 77. Let's see, is that where this golden pocket I think is going to be important? Yeah, 77.7-ish is a golden pocket. It is also, if we look at this kind of prior sideways range, we had kind of a sideways range in here until we broke it. So if we look at that volume profile, I think this is the volume profile I was looking at. Yeah, your POC of that range is right at that golden pocket. So it is a pretty nice, and then you can see the value area high of that range is right where your daily's at. And you have your anchored VWAP from the previous range high there. So I do think we'll get some sort of reaction from this daily. Now, am I saying that's going to be the level where we reverse and go up to 84 or 87? No, I'm not saying that, but I'm saying we might be able to get a scalp long from the daily at 78, let's just say 550-ish. If we lose that, yeah, your golden pocket at that POC is nice. Let's look for our naked daily points of controls. Do we have any naked dailies in this zone? No, unfortunately, there's no naked dailies in this move up here. And your naked weekly is down quite a bit here, 76. But the major zones that I was looking at yesterday for if we're going to get a bigger pullback on this thing, and we're going to start like pulling back off this whole entire impulse, because there is a real scenario that this entire uptrend from 65K is done, and we're going to pull back pretty aggressively. What I would be looking at is we have a couple bigger levels down here. And I believe one of these is the golden pocket and the pitchfork band. So if we pull, let me just zoom out a little bit here. Yeah, golden pocket, pitchfork band, this box in here. That also happens to be, like Crypto Clan World said, the CME gap at 67K. So that's a real nice support level. And then now that golden pocket though is pulled from this impulse low to impulse high. I believe that was the one. No, I'm sorry. That was pulled from the range low. Range low to range high. Your macro golden pockets coming in 68 to 67-ish. Right there. Golden pocket, pitchfork band. And then, let's see, this golden pocket's very interesting as well, guys, because remember this 70K lows. These 70K lows were so important. I've covered this a lot in the last week, so I'm sorry if this is review to some of you guys regulars in here, but we had our previous range in 2024, and we were trading within this previous range for 2 months. We fell back inside of it. Remember, we impulsed back inside of it. We bounced from the value area low. We back tested the POC. We came up, we back tested the POC. We were finding at the first half of the range. Let me get up in here and clean this up here. At the first half of the range, we were rejecting from the value area high. Where did I put that guy? Some of my stuff has gone missing here. I don't know what is going on with, I know I need to clean this up. That's why, but we were rejecting from the value area high. It was right it was like at $70,000. Our value area high was at $70,000 pretty much. And it was right underneath there. Like that was your value area high. And it was resistance, 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 resistance. We kind of had some failed auction stuff above it, but we broke above it and then we flipped it. And we flipped it and we flipped the pitchfork band into support. So below 70K, it was an important support resistance flip for the pitchfork band and for our 2024 range value area high. Because of that, we had a lot of long positions stepping in there. And that's why if we look at the liquidation heat map and we go to look at that last 3 months of price action, there is a lot of liquidity resting below $70,000. I think I might have to go to the Model 2 for that one. Yeah, it was on the Model 2 heat map. We'll zoom in a little bit here. Okay, well, it's not showing it now. There was a lot of liquidity around $70,000 underneath those lows. Another big level, and I get that this is a lot of levels, but if we look at the volume profile of this entire 3-month long range, at 73,000, we have that liquidity. I showed it to you guys in Tuesday's live stream. Liquidity from these lows resting into the value area high, 73-ish. So we have levels to be looking at. And remember, as traders, we don't have to know which level to trade. We trade the reaction once we get down there. So if we come down to the daily and we don't see confirmations for a long, we just wait, right? Because it might bust through it. If we come down to the golden pocket and we don't see confirmations for the long, maybe you take a scalp, but you protect position right away, whatever, you know, all that stuff. If we keep coming down and we see now, as we're coming down to the value area high, we see bull divs building on this move down. That is when we can attempt a real good, nice position from the actual support level with the confirmations. That is why I'm a confirmation-based trader. And that is also why the trading bot is giving me some hesitancy, because I don't want to post like, hey, possible long 73, 73.6, your stop is going to go below, you know, like let's say a little bit below this wick here. We're going to be targeting the golden pocket of the move up, you know, 9-to-1 risk reward ratio. I give you all this information and it comes down and we don't see confirmation. I'm going to have to post in the chat and hopefully you guys will see it. Like, hey, I'm not taking the trade. Even though I posted it as a possible bot trade, I'm not taking it. You're looking at Aptos. Let me see. Aptos was another one that I am interested in. I do like Aptos a whole lot. It hasn't broken out quite yet. We did come up to a pretty nice resistance. Naked daily point of control, 786 Fibonacci in this box here. Finally hit that. Now this is, we can get rid of this. Yeah. And it's your value area high of this range, or it was when we looked at it back in the middle of April. Let's see if it still is. Okay, it's shifted down a little bit. What I don't like about that, Circus Crypto, is serious. We rejected from our resistance box and we're back inside the volume profile. Now we are just chopping between POC and value area low, but if you see a fake out of the value area high, you fall back in it, and we do get stuck inside of here, it's likely we continue down and at least sweep this liquidity, but you might continue down to value area low. Let's see how our divs looked. Did we have bear div? Yeah, we did have higher highs here, lower highs here. Not really on NAMI. Let's go to our important 8-hour time frame. Yeah, pretty bad bear divs, money flow draining out. What I would look at in this is you could just pull a trend line or a channel, and I would be looking at kind of this trend line, right? Bounce, 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 bounce. A little bit of wickage past it, but a bounce overall. Let's do this. Let's pull the channel. Here, and I would even bring it up to that high. Yeah, because you can see the midline rejected, 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 a little bit of a move past it. This is the channel I'd be looking at right now. All of this. So if you break this lower part of the channel, right now it's around 98.2, then you're probably going to see a flush down to value area low. Another thing that I don't like here is if we're looking at this, this clearly looks impulsive. This looks like corrective, and then we did make new highs, but all of this, it doesn't, this looks like a three-wave move up so far. If you were going to see a real big impulse, 1, 2, you would want to see this thing starting to take off here. Now, I think it was Tau that we were looking at just the other day, and we were looking at a channel very similar to this, and it did it. It did it, right? Because remember on Tau, we were looking at, hold on, was this Tau USDT? We were looking at a channel in here where it was making all those higher lows. We came down, we bounced. That was also the POC, and then we did end up impulsing all the way up. We rejected from my box, by the way, that we marked out ahead of time on stream earlier in the week. Golden Pocket POC. We're starting to, that would have been actually a decent day trade short already. Yeah, and so could Aptos do something like that? It could. But I don't like the choppiness in here and the fact that we fell back on lower time frames. We fell back inside the volume profile. On the higher time frames, we wicked up into resistance, and then now we're still inside the volume profile. So that is something we got to be worried about with some bear divs. Let's see if our daily gave us bear divs. Yeah, you do have some bear divs, multiple drives of bear div actually on daily. So all this higher highs in here. Lower high, lower high, lower high, money flow starting to drain out. To me, it's a bit scary. You might see that rotation down to the value area low. Let's pull our Fibonacci. Yeah, and look at I would expect if you're gonna rotate down, you probably are gonna come to value area low. So this could be a nice little support to look for a long though, guys. This value area low, golden pocket, at like 89 to 90 cents. Okay, and it looks like your 786 is going to have your naked weekly by it. Naked weekly point of control 786. So I would say that could be the next nice little level. Oop. This could also be a level right here. Okay. Yeah, and remember with channels like this, when you break them to the downside, it's creating a liquidity trail, right? So people long in here, they put their stop below that low. Or if they longed in here, they're putting their stop below that low. Then they long in here, they put their stop below that low. Anybody that longed in here puts their stop below that low. Anyone that longed in here puts their stop below that low. And anyone that longed up here putting their stop below that low. So it creates this liquidity trail. And then we have some fresh longs that enter probably in here that put their stop below these lows. So you have all these stop losses that are like a cascade. And if you start to break this channel down, it usually sweeps them all quick. Boom, 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 boom. And it sweeps all of this liquidity very quickly and sees a sharp move to the downside. So I mean, it would be nice if we like back test and then lose it. And upon this area here, you could look for a potential short down to golden pocket, value area low. That could be a real nice little trade there as well. So maybe we'll keep an eye on this. Let me do this. We'll set an alert. I'll just throw it like right here. We'll set an alert on that and see if we start to break that down, we can look for that move down to 89, 90 cents. Solana, how's money flow on Solana? Okay, so first off, for Solana, up here, we were looking, there was a naked monthly point of control, naked weekly point of control, value area high, and it was your golden pocket as well. We were looking for a rejection here, and we were looking for a rotation all the way down to value area low. There was a daily down here and a naked daily point of control at 81.5. By the way, I'm still in my long from 81.5, and I can post the screenshot in the Telegram if you guys want to see that. I took it on my smaller MEXC account, not my BYDFI account. But on ByteFi, I was waiting to grab 81.29, and we never got that. But we were rejecting from value area high, or excuse me, POC, POC, POC. It's also our anchored VWAP from the lows. You can see that anchored VWAP coming in from the lows at the POC. And we finally broke up to value area high. We are finding resistance here, but we did break above the golden pocket, which was our weekly level. We did get a small reaction from that weekly, but now that weekly's been broken through, and we are pushing, we're chopping, we're pretty much trying to flip the POC or the golden pocket to support. If this golden pocket, now the golden pocket was pulled from this high to this low. So we've broken above it. Oftentimes when you break above it, it will end up acting as a support, and then you continue up. The next big level, we do have a naked, I believe it's a naked daily point of control. Okay, we are rejecting from a naked daily at 90 right now. That was an old naked daily that we are starting to reject from. Let me go to the 1 hour. Naked daily point of control from Tuesday, April 16th, rejected from it in the past couple of days. And then we have at 91, there's a lot of small volume levels, which I don't like on Solana because we're seeing chop. 91.7 is a naked weekly. But the one that I like a lot is this one at 93.8-ish, right? It's a naked weekly point of control into a liquidity grab into a naked weekly. So if we hold this, we might be able to see a move up to like 93.8. That's the next big level I would be looking at on Solana, with maybe a small pullback at 91.7. Maybe we do something like this, guys. We bust up to 91.7, reject, back test that value area high bullishly, and then work your way up to grab the liquidity here. How does money flow look? Well, let's look here. 1 hour chart. We are seeing on NAMI, we're seeing bear divs. Higher highs here, lower highs there. Money flow is crossed into the red. On Market Cipher, money flow is starting to drain on the hourly. So small pullback or range, right? And it does look like we're starting to form a range. On the 2 hour chart, you do have confirmed bear divs as well. Just like Bitcoin did, you have some pretty extreme bear divs. Higher highs here, lower highs here, multiple drives here, money flow draining out. 4 hour time frame, no bear divs, but money flow is topping on Market Cipher and is already draining out on NAMI. 8 hours, what's really important to look at that money flow. Okay, and it actually doesn't look too bad on the 8 hour. So because we're seeing low time frame bear divs, we expect a little bit of a pullback. But the intermediate time frame, it's looking okay, a little bit ambiguous. It's starting to drain, but it's looking honestly like it wants to curve back up here. And then if we look at the daily, yeah, money flow still looks pretty good on both NAMI and Market Cipher B. So if we look at Market Cipher B, heavily coming up into the green on the daily. And if we look at NAMI, heavily coming up into the green on NAMI. What I would expect is, because we have 2 hour and under bear divs, but the intermediate time frame and high time frames look good, is a small pullback and then a probably continuation to the upside. So what I would be looking at is, we had this descending channel, and this descending channel I was just pulling from the past like 2 weeks of price action. You can see we kept making it. We had an uptrend here, right? An uptrend in here. We rejected from our main resistance, and then we started a downtrend. Now that we're breaking that downtrend channel to the upside, do we reject from that value area high and that naked daily point of control just to see a move back down to back test that channel and then continue? So right now, based off the high time frame money flow, based off everything that I'm seeing here, I would actually look at potentially longing a support level, and the support level that I'd be looking at right away that I see your POC, your anchored VWAP, your channel backtest at like $85. That would be a very nice level where if you come down and you backtest that, you could get a move up to new highs. Do we have any other levels there? You also have a naked daily there. And a naked weekly. Excuse me. Hold on, guys. I need to get a drink of water. Well, it's not naked yet because this is from this week. So our weekly point of control is there. But it's coming towards the end of the week. By the time we get down there, it's probably going to be real close to the end of the week. So it might be a new naked weekly, but it's from our current week. But let's just say this box of support right now would be, if we pull back to this box of support, I would be looking for a potential long. I'll set an alert on this naked daily, and we can look. I'll let you guys know in the Telegram once we get down there. If I do decide to take a long from there, I'll let you know. Or I would actually be adding to my long. Okay, and then yeah, it does look okay, you know, as far as the higher time frames. And if we look at that range that we've been in, this range here that we've been in for about 3 months now, it's been going real sideways. A lot of like Bitcoin's been going sideways and up, making new range highs. Solana has not taken out those range highs yet at 97. Yeah, I would really like to see that, guys, because we had the uptrend, rejected from macro resistance or the big resistance confluence. We dropped all the way in a downtrend channel to our support, and now we're breaking out of that downtrend channel. If we backtest it, you would expect at least to take out this high. And I would be looking to take some profit at the naked weekly and that liquidity, the liquidity grab into the naked weekly, 83.8. Here's the thing. If the bear market, if Bitcoin is going to reject or even come up a little bit higher, let's say Bitcoin ranges for a few days or rejects at 87, a lot of the altcoins are probably going to move up. We could see this take the highs at 97, 98, and then we could see that rotation down, and we want to take out that low. It would create that accumulation, right? If we're looking on the daily time frame, a lot of the altcoins especially, we see accumulation at the bottom of bear markets. Like if you go look at Chainlink's the best example of accumulation I've ever seen. But we could see something like this where we range in here, and this is our accumulation, our tap 1, our tap 2, our tap 3. Come November, come September, October, November, we see expansion to the upside, right? But you would still want to make one more macro low on this thing. Okay, let me check the chat here, guys. I'm thinking 80. I was thinking 83, 84 before we can go to 93. Yeah, we'll have to see, right? Level to level, Leo. And 83, 84 is a very important level. That's that golden pot. I would say closer to 84. Benny Blanco from the Bronx, welcome in, man. Thank you so much for the kind comment. It's great to see you in here as always. Do you think it's more likely to move up from here short term? No, well, short term, I think for Bitcoin, if you're talking about, I think we get a little bit of a pullback because we had, just like on Bitcoin, we had 2 hour and under bear divs. But on the high time frames, it didn't look so bad. So I'm looking at that daily level, which is our previous range value area high. It's an anchored VWAP. That might give us a bounce. Or the golden pocket at the POC, 77.7. That could give us a bounce. I mean, there's many levels to be watching, but I am looking for a little bit of a move down. It looks like, did we take out the low since the live stream started? We're still not taking out that low, guys. It is very hard to count this move down right now as an impulse, because there's so much choppy overlap in here. Choppy looking overlap. Like I said, if it's the WXY, we get the W down, we get the X triangle, and then we get that contracting diagonal in the wave Y. Oops, that's horrible, but you know, you contracting diagonal in a wave Y, or a ABC, excuse me. You get your move up here, three-way move up in an X. You have a very clear three-wave move down in a Y. You would want to hold this as a higher low, and then you would want to start pushing up here. Right now, it doesn't look the hottest. It really doesn't. But once again, guys, this resistance at 82.5, I've been harping about it. Go look at my thumbnails for the past 2 weeks. How many times I've talked about this level. Very key resistance here. 1-to-1 trend-based Fibonacci extinction. Pitchfork midline. Logarithmic golden pocket. If we look at our larger pitchforks, it is the bearish backtest to the exact dollar of our larger, this is our multi-cycle pitchfork, which has been highly, highly, highly respected. Rejection all-time high at the midline. Lose the band, bearish backtest here. If we reject here, guys, I would expect that we could see a move all the way down. Now, I'm not saying it's going to be one straight dump. I would look for impulses, maybe a corrective move up, another impulse. You know, so just a move down over the next couple of months. That's why I talked about on the thumbnail today. This decision that Bitcoin makes here could determine the next couple of months. Because if we break above 87 and flip it, you're likely to continue for the next couple of weeks to couple of months to the upside. If we reject 82 to 87, we're likely to come in the next couple of months to take out 60K. Okay, bull divs on Dash. We'll look at Dash in just a second. Sorry if you answered this already, internet issues, but do you think 22K or 21.4K is possible for Bitcoin? I don't. Arthis Salvatore, welcome in, by the way. Thank you for being here. Yeah, and we'll check Ondo, Mark. Okay, so 22K, I don't think so. Here's the reason why, and let me just be quick on this. If we look at on the weekly time frame, our golden pocket, our logarithmic golden pocket. So if we pull it from the bear market lows at $15,500 all the way up to our all-time high, our golden pocket is coming in at 34,500 to like 32,200, 250. That is also the most important support resistance flip on the chart for Bitcoin. Support, 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 resistance, resistance, resistance. In worst case scenario for me, this is worst case scenario. I actually think we're going to bottom out around 58 or 54. But if we are going to continue down, I think that we would see so much come in at the mid to low 30s. Okay, I want to check Ondo, and then we will look at Dash as well. Sorry, guys, this is a messy chart here, but wow, it is pumping. Man, a lot of the altcoins are really taking off, guys, and but they are, we see this so much. Like if we look at when Bitcoin pumps, we get these big explosive pumps just followed by drainage. Big explosive pump followed by drainage. But I would say this, Ondo has had a clear range, a very, very clear range that it was in for the past 3 months or so. This bottom price action here, very clear range, right? Sideways chop, all in here. That's a horrible circle, but you get the idea. You could even pull this back to here. I don't like including this because it's part of the impulse down, but it doesn't really change the volume profile. We are breaking out of that range. You see resistance, 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 break above, flip to support. Break above, flip to support, impulse. So we are breaking out of a very, very clear range with impulsive price action to the upside. Now, could we say even from, all right, one thing I don't like is the start of this range. This move up was a three-wave corrective move. Generally, when you have a three-wave corrective move, you will come eventually take out that low. But we haven't yet, and we're impulsing out of the range to the highs. That means we're likely to continue higher until taking out that range, but now we need to look for important resistances, right? Let's go on to the daily time frame. So what I would be looking at is that last daily kind of swing high in there to our lows, and that is going to be definitely more than a 30% drop. Yeah, it's a 57% drop, so we're going to take that fib. Let me just change it to golden pocket. We'll put it on log scale. Okay, we're at the golden pocket right now. We wicked up past it, but we're at the golden pocket and we're at a daily level. You can see that daily level right there. So it is resistance that we're at right now. Yes, we wicked quite a ways past it. I don't know where this is coming from. This is probably way old. But could we be looking, so a couple of things. 1, 2, 3, ABC, and then dump? Or is this more of a 1, 2, and this is going to be a 3, 4, 5, right? Daily time frame money flow looks very bullish on NAMI and Market Cipher B. No bear dibs here. Let's pull our trend-based Fibonacci extinction from the lows to the highs to the higher lows. Yeah, guys, we are at a very, just like Bitcoin, we're at the golden pocket, the log golden pocket, and the macro 1-to-1 trend-based Fibonacci extinction. I would be very, very careful here. I would definitely not be longing right now. You are literally in your resistance zone, your macro resistance zone. If this is going to be a corrective, macro corrective move, you could dump down to take out these lows. Now, because this first start move up here was a three-wave corrective move, it is more likely that this does get taken out. So this could be a real spot where we roll over and come down to take out that low. On the other hand, if we are going to look at the bullish scenario, because we already have wicked a lot past that, well, you really want to get above 39 cents. But if we look at that same trend-based Fibonacci extinction, and we look at our 1.618, that is going to be coming in at 45.27. What else do we have up there? We have a nice, let me make sure I get right on that. We have a nice daily level right up there as well, another daily level. So just like with Bitcoin, there's confluence. If it's a ABC, we should reject in this area and we should start to roll over. If we're going to continue impulsing up, then you would expect your wave 3 to end in this zone up here. Or at least that's a common area for it to end. And with that liquidity that's just above, I would say you're probably going to grab that liquidity as well. So I would probably make this that box right there. You're going to come into the next big zone. Do you have some minor levels in between? Daily level here, daily level here. Yeah. Let's look for weekly levels. You have a weekly level a little bit before. So these are levels to look for, like rejection, small pullback, maybe a couple days. But if you're in a wave 3, so if this is on the daily time frame, like a 1, 2, 3, actually, you couldn't even say it's a 1. You can't call this a 1 because it's a 3-wave move, and your 1 has to be a 5-wave impulse. So could we say this is a W? I don't know. We would have to say this is some sort of complex correction in an X, and then we would be looking for a 3-wave move in a Y. I mean, you are looking to come still up to that 1-to-1. Guys, because this first move up was 3 waves, it's very problematic for an impulse. It's very problematic. Now, on ZEC, I just showed you how it did look like ZEC had a 3-wave move to start wave 1, and we're respecting the targets perfectly. So there's major problems, but let's just have bad, improper Elliott wave analysis and say that's a wave 1. All of this was a wave 2, and we're shooting up in a wave 3. You could come up to that 45.5 to 47 cent area. Within the wave 3, though, within the wave 3, you would want to see, so if this is 1, 2, 3, within this wave 3, you're looking for 5 waves. 1, 2, 3, maybe we pull back here 4, or I would probably want that to continue. 1, 2, 3, 4, and then you would expect to see the 5 coming up into here. Yeah. As of right now, I would not be longing into this resistance. Daily level, Fibonacci golden pocket, 1-to-1 trend-based Fibonacci extinction. We can also now look at, instead of Elliott waves, we can look at our pitchforks. Let's pull that pitchfork based off of this current uptrend. So from the low to your first initial high, down to your lower high. And actually, I would even, like with Bitcoin, you can pull it. No, I would want to pull it to this one here. Okay. And then we can go look at, first off, we'll look at the very bullish trend in original pitchfork. It doesn't look like we're going to see an explosion. Yeah, I wouldn't be looking quite at this one. But what we could look at is the modified, because the modified is going to be your second largest move, like a decent move, aggressive move to the upside. Now what we can look at is we can zoom in and we can look at how well was this pitchfork respected on the lower, like inside of here. So yeah, you do have some nice respect here. Rejections, bounce from the bottom, flip above the band, flip it to support, get above the midline, flip it to support, flip it to support. You're breaking up above your band, you flipped it to support, came up to the top. Now you're coming back down to hold the band and the daily. So the daily was naked until today. You broke above it, and right now on low time frames, we're back testing it and holding it as support. If you start to break out on the daily time frame, if you start to break out of this pitchfork, I think you're coming up to 45, 47. So a daily candle close above like 37.5. You're probably going to work your way up here. Yeah, and honestly, the one big thing I'm worried about, now I know this chart is super, super messy, so bear with me on this, guys. But we're looking... Okay, from the highs up here, wave 1, wave 2, wave 3, you get the idea. Is this a wave 4 before seeing a 5th and final new low? Because remember, that low is likely to be taken out. So let's look at that. Let's pull our, and I'll just bring this to the weekly so it's easier. A weekly move to the downside for the bear market. Gosh, that would be really nice to take that low too. At 19 cents, guys, if you take that low in a 5th wave, I would be looking to spot buy this thing. But look at what wave 1, wave 2 retracement, your wave 3. Okay, it looks like I already had it here, 1.618. So we didn't quite make it to the 1.618, but we did make it past your ABC target. Actually, yeah, you kind of bottomed out around the 1.32236, excuse me. This is a bit aggressive here for me. I would probably classify this more as an incomplete impulse. 1, 2, 3, and your fourth wave could come up here though, or even higher. Let's see. Let's pull our fourth wave targets from the highs of wave 3 to the lows of wave 3. We're looking between the 382 and the 0.5, but we have to put it on log scale because that's more than a 100% drop. So yes, absolutely, you could come up to, so remember in the ABC correction, the smaller. All right, now we have our wave 4 targets. This is where this move up could end, between 39 and 48.5. Let's zoom back into the daily, and on the daily time frame, even if this was an ABC, remember this being here a zigzag correction or a WXY here. What we're looking for is to reject between the 1-to-1 and the 1.236. Now that was this right here. Look at where your 1.236 is, right at that 382 Fibonacci. Actually, this is now looking really important in here because that's your wave 4 minimum target. So could you see this up to the 1.236 and then the dump? This is your wave 4, and then you get one more wave 5 to take out these lows and probably your macro low. On the other hand, if we're in an impulse to the upside, which remember, it's less likely because this is not a 5-wave move, then you're looking for 1, 2, 3, 4, and then maybe you get the 5 topping out around 48, 49 cents. Man, because if you get an impulse here, you do have a higher chance of making a higher low in continuation. But I would be very careful of rejecting around 39 cents or once again, where we're at kind of right now. Okay. Quiles, thank you so much for the super chat. What She Legit do I buy? It's called Himalayan Healing She Legit. Let me just see if I can't find that link for you. And thank you so much for the super chat, man. I appreciate that. This one is like, it's like third-party tested. Okay, here. Let me see if I can post it. That's not it. Hold on, let me. So this is it right here. Himalayan Healing SheLegit.com. It's a really, really nice, good one. Okay. Ooh, guys, let's look at Dash real quick. Okay. Jan Pora, welcome in, my man. I don't know how to, something about XPL 0924. Yeah. One more question. If you have time, it's not, if not, all good. Is there a market turned up to like ultra mega hardcore mode? Or yeah, the market has been pretty, I will say this for Bitcoin, especially for Bitcoin on the macro time frame, I kind of was expecting a move up to 82 to 87. Once we started breaking out of this value area high and flipping it to support, I expected to come up here. I actually was very adamant about that. A couple, you know, I won't say, actually, I'll just leave it there. But this move from 65K up has been very choppy, and it hasn't been the nicest of an impulse. Now, clearly it's an impulse up, but it hasn't been the nicest. So yes, it has been, for the past few weeks, it's been a bit harder to trade on hard mode, right? What I will say is we were looking for the long at 65K because it was our value area low, it was our golden pocket, it was a weekly level, and it was a naked daily point of control. If you go back and look at the box around March 29th, go watch my video. Actually, even the week before March 29th, we were looking for some sort of bounce from here. Now, I will say this, because this move down was looking pretty aggressive, I was looking for a bounce, a rejection, and continuation down. I was actually looking for this to be our ABC and then a down move here. But I was still looking for longs here because I was at least looking to pull up a bit, you know. It just pulled up a lot more than I thought originally. Once we started flipping the value area high, I was expecting 82. Himalayan hippie salt. That's awesome. Yeah, please, thank you, Crypto Wanderer 5813. Please do hit the like button for me, guys, if you get any sort of insight into the market. And also, will you please subscribe to the channel? If you want to use the links in the description, they do help the channel out. They are all our affiliate links, so that's appreciated. Also, if you do want to join the Telegram, remember, all you have to do is join BYDFI using my affiliate link in the description below, and then deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses into the exchange. That money that you're depositing is your money, just to use it to trade on the exchange if you want to try it out. Once you've done that, you click the Telegram link and you type in /verify and then your user ID, and that'll get you into the Telegram. And thank you so much, Mark, for posting the link to the Telegram and to BYDFI. Okay, let me see. I'll check Dash real quick here, because Dash was looking pretty good as well, if I remember. Yeah, Dash is pushing up. Actually, we're at that resistance zone that we laid out last week. It's wicking quite a bit past that. Now, what we saw is on the daily, you wicked way far up past it, but you closed your daily candle at the resistance box. And today we wicked up again, but we're down at that resistance box. So that concerns me that we could see a couple candles in here and start to roll over. If Bitcoin's really going to roll over, Dash will roll over here too. But because we're seeing multiple attempts to break up, we could be breaking up to that macro golden pocket at the top of the pitchfork, the bearish pitchfork, 61 to 63 cents. There's a daily level in there. And right before that at like $59, there's a naked weekly. I would say what we could see is, because we see these giant wicks on here, if we continue up, we could hit into the golden pocket, but close the daily candle body at the naked weekly, but still we would wick up into this golden pocket. But I have to say, this golden pocket at 63, 62, 63 looks really nice here, because it is the top of the bearish pitchfork too. And that could be a macro, at least a drop to back test your pitchfork band. Money flow looks pretty good on Market Cipher B, but on NAMI, which is quicker, it is rolled over, momentum wave rolled over. Let's go to the 8-hour. You did see very slight bear divs here, and you do see bear divs on NAMI. Four-hour. Multiple drives of bear div. Money flows curving out on NAMI. On Market Cipher, your money flow's looking to top with the bear divs. So, yeah, it's either we need to close the daily candle above this purple box, above about 51.25-ish, 51.3, let's say. If you close your daily candle above 51.3, it's likely you could continue up to 62 to 64. And this, I have to say, this kind of looks corrective in here. This looks corrective. Oh, yeah, it looks nicely corrective. Let's see here. Could we say 1, 2, 3, 4, 5? This could be a contracting diagonal in here, guys. This some sort of contracting diagonal in here. So what you do want to watch for, because there is overlap, but there's 5 waves. So in the bearish scenario, you're going to see a 3-wave move up to golden pocket 786. So we would want to pull that. Golden pocket 786. You might reject 55.56 and then come down again. So I would be aware of contracting diagonal in an A. You'd want to see a 3-wave move up in a B, and then you'd get another C coming down. But it looks like also that could create a nice sideways range for you, and then you could play that volume profile. We want to do daily. Yeah, I would really be watching this golden pocket, guys, at $55-ish, because you could reject there, creating a lower high. A, B, and then you would at least expect to take out your B wave low or your A wave lows. Because you have a fresh naked daily point of control from yesterday that closed right there at that golden pocket. And then, like I said, if we start to, we're getting close to the end of the day, 30 minutes. You could be above it, but I would still watch out for the fake out at that golden pocket. And then let's look at, yeah, I mean, you did actually see some bull divs on NAMI, money flow crossing into the green on Market Cipher. I think it's likely you move up to this golden pocket. At least move up to the golden pocket at 55. I would just be careful around 55 to 55.2-ish for a possible rejection to make a new local low. Maybe coming down to 48 or lower. Okay, yeah, Bitcoin, let's see where Bitcoin's at. I mean, technically, we haven't made a new low below that low just yet. But I'm going to be watching this daily because it is the value area high of your previous kind of sideways range. And it's your anchored VWAP from the last range high. That if we're going to remain bullish, then if you come down here and bounce from here, you are likely to continue up. But on Bitcoin, remember, macro resistance in here. I don't know why that does that. 4-hour macro resistance hit. Thank you, Mark Dutch. I appreciate the kind comment, man. Yeah, XRP, I can look at XRP real quick. And guys, I'm sorry if I missed some comments today. It is getting a little bit hard to keep track of all the comments. I really am doing my best, though, with it. So XRP, we've been in a sideways range for 3 months. We rejected the value area high perfectly. We have lost the POC of the range. If your golden pocket doesn't hold, you're likely to continue down. Oops. Let me just... I don't like how we front ran the value area low with this low right here. And you're at your golden pocket. Let me make sure it's non-log scale. Yeah, you're at your golden pocket right now. What I would say is a perfect rejection from value area high. You did front run the value area low. So I don't like that. I would... this almost looks like kind of a triangle in here, right? Some sort of triangle. Let's see if I put that here. And actually, I would say maybe a flat triangle like this, excluding the wick. Let's see where our daily candle. No, it's right there. Okay. Let me try something here. Yeah, I would say you could be looking at some sort of triangle building in here, but remember, a triangle is a continuation consolidation pattern. And in a triangle, if you dump coming into it, you have a higher likelihood of dumping coming out of it because it's a continuation consolidation pattern. Now, if this is a valid triangle, let me hide this volume profile. We're looking for 3-wave moves, right? So you have your 3-wave move up in an A. You would have to look at this as a 3-wave move down in a B, maybe a 3-wave move up in a C. And I would even actually look at all of this as the 3-wave move down in an E. So you would be expecting to make a new low below this local low here. the last three, A, B, C, D, E, and then you could, well, a lot of times on triangles, you do see fake outs to grab liquidity and then the drop. So I would really be careful of that, but we're rejecting from the value area high and we're losing the POC. Simple as that, guys. Volume profiles are volume levels are very important. If we're looking at this volume profile, you rejected the value area high absolutely perfectly. You've lost the POC. You're at your golden pocket. This has to hold. If this doesn't, I mean, golden pocket 786 zone has to hold. So this little zone right here has to hold. If it doesn't, you're very likely to take out this low. Okay, I like this naked daily at the bottom of the triangle area here. You have a naked daily at 132.6. By the way, that rejection at the value area high was also a naked daily point of control. Naked daily value area high, rejection. Perfect rejection. Looks like a pretty nice impulse to the downside so far, or the start of an impulse to the downside. And let me go to the 1 hour for these. Yeah. I mean, there's not much else in here. If this golden pocket doesn't hold, you could pull a golden pocket from your last bigger low to that high. Yeah, we've already hit into that golden pocket here, but you have not hit into this 786 yet. So that is one thing we would want to pay attention to. That 786 confluence being right next to the naked daily point of control at 132.8 to 132.6. It could be a decent zone to look for a long. I probably personally would want to see it reclaim the value area low. So if we do see something like, I would want to bounce here, and as soon as we start to reclaim the value area low, that is when you look for the long, you set your stop below that low, and I would at least be targeting the golden pocket. You would have to pull your golden pocket from wherever that high to this low. Actually, yeah, 786 looks really nice too because it would be POC. So that would be the long, right? A decent long position there, 4.5 to 1 risk to reward ratio. Because your POC, and by the time you get down there, say you do end up coming down here, bouncing, working your way up to the top of the triangle, it's going to be right in that area as well. The big thing about XRP, just like with a lot of the altcoins, guys, the very first move up that we saw from the lows, those crash lows that we saw in February, it is a very, very clear 3-wave corrective move. That is a bad sign for this being an overall low. That is a bad sign for this being an overall low. Yeah. All right. I hate it too, man. Triangle pattern, but triangle patterns are very valid. I don't think of it in terms of a normal, like, pattern triangle. We think in terms of it in Elliott waves, because triangles form off in impulses 1, 2, 3, 4, 5. You will often get a triangle that forms in a wave 4. And actually, it's very common. You hit the 382 and then you get that move up. So triangle patterns are awesome. And it's also a continuation consolidation, right? You pump into it, you get a triangle for wave 4, you pump in your wave 5. In ABC corrections, A, you get the triangle that forms in a B, and then you get your C. You get that kind of triangle that forms in here for the B wave, and then you get your C wave. So we do see it. We do see it. Okay. So, Yapora, I don't know what you're saying about XPL, but I can see you have XPL in there. We looked at XPL the other day while it was pumping on stream. Like it was literally while we were on a live stream a few weeks ago. We were looking for a potential ABC correction. A, B, and then a C. And we were literally watching this happen as it was happening on the stream. The 1-to-1 to the 1.236 was our target for that rejection, grabbing liquidity. And you had a daily level in here in the middle of it. And I believe that was your golden pocket as well. Yeah, so see that golden pocket daily level is where we rejected on that wick high for that potential C wave top. We made a bunch of lower highs in here and we broke this. Once again, this liquidity trail, guys, look at that liquidity trail that forms. As soon as you break it, you sweep it all really quickly. That's what could happen on Ondo right now because we're seeing that on Ondo. You were creating this ascending channel with a couple wicks, but you had a very nice ascending channel in here. Ascending channel with some wicks outside of it. As soon as you break it down, you see a quick breakdown to flush all those stop losses. Stop losses, stop losses, stop losses, stop losses, stop losses, stop losses. Flush all of them. We're seeing a nice move, and I remember this was the value area low. So if we look at this sideways range on XPL, we bounced directly from the value area low. We're reclaiming the POC, and guess where the value area high is? At our new golden pocket. From the last high to the low, so around 12 cents, 12 to 12.2. I would be looking for at least some sort of pullback there. But it's likely because we had such an we have liquidity here and an aggressive fair value gap here, it's likely we continue up to 12 cents. Very likely. I actually want to set an alert here. Short if confirmation. Okay. At that 12 cent area. Thank you, Hunt Like a Wolf. I appreciate that so much, man. Yeah, thank you so much for the kind words. Fighting to close above 80K. Yeah, gosh, we're right at 80K pretty much, at least on Coinbase. Now we are exactly at 80K. Oh, not anymore. What I would say here, look at on the daily time frame, guys. This is what's concerning to me. We've been looking at this very key resistance for weeks. If this is the bearish scenario, and I know I went through this a lot today, ABC correction. Where are your common targets to end an ABC correction? 1-to-1 to the 1.236. Contracting diagonal in an A wave. 3-wave pullback in a B. Multiple 1-2 impulse in a C wave. You hit the 1-to-1. You hit your golden pocket, pulled from the 98K highs down to the lows. Because it's a 39% drop, you need to put that based off log scale. I know I have it somewhere in here. Based off log scale, 82.5, right at your 1-to-1 extinction, and it's your bearish pitchfork, midline. What happened with the pitchfork? You bounced at the bottom. Yes, you saw some wickage on the daily candle, but your candle body closed at the bottom. Rejection, 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 failed auction, rejection, flip to support. Once you flip this to support, you expect to work your way up here. But here is the big test. And then if we look at our other macro cycle pitchfork, macro cycle pulled from the COVID lows. Pulled from the COVID lows up to the 65K highs, down to the 15K lows. Midline, all-time high rejection. We broke through the lower band with an impulse to the downside. And now where are we coming up to? The perfect back test of the pitchfork band. I just, a lot of people are getting hyper bullish right now. I am very concerned of a bigger dump. I'm very concerned. I'm not saying that we can't go higher. Guys, we could wick a little bit higher. Our anchored VWAPs from the all-time highs are very big resistance targets. Actually, let's look at the Coinbase anchored VWAP from the all-time high. This is what happened after the last big dump. So you lose it, reject, and on the second rejection of that anchored VWAP, huge drop to the downside. 3-wave corrective move. What do? You hit the anchored VWAP, huge move to the downside. What are we doing now? 3-wave corrective move. If we hit that anchored VWAP, huge move to the downside. I mean, it could be the same kind of bear cycle pattern repeating. So yes, could we come a little bit higher, guys? We could come a little bit higher. We could even come to 86, 87, because that is the back test of your value area high of this range. And as far as market auction theory says, we could come up a little bit higher and back test that. But it does look like we're starting to run out of steam here. And bear divs on some time frames, we do have volume decreasing on the move to the upside. Overall, volume's decreasing. If we look at other exchanges, volume's kind of been decreasing. If we look at Binance, volume's been decreasing as we're moving up. It's just, here's a time not to be looking for swing longs. Let me just say that. Not to be looking for swing longs, but to be against the trend. The trend, the sentiment in the market right now, if you go on Twitter, is hyper bullish. Bear market's over. New all-time highs are coming. OMG. Bump out and run pattern, which, by the way, I do think the bump out and run pattern is a valid pattern. Where was that on my chart? Here we go. On the index chart, we've been looking at this channel. A lot of people are looking at it just as a ray, right? A ray on the logarithmic scale. Bump, breakout, back test. Oh, we're going to run. We're going to run. But I said this 2 weeks ago. I would not be surprised if we break out, we back test it just to come up to 82K or 85K and then see the dump. A lot of people are following this bump and run pattern. And I remember saying, I said, there's a very important influencer that has been talking about this bump and run pattern, crypto influencer. And a lot of people are talking about it on Twitter. I don't know if it's going to play out the way a lot of people are thinking. I think we could get the start of it, a fake out into that major resistance, and then dump. I will try to find where I talked about that. It was probably a week and a half, 2 weeks ago. I know it was before we broke out of it. It could, guys. It could. The bullish scenario could play out. As far as our market structure goes, we still are in overall bullish market structure, right? So we want to pay attention to market structure. High, low, higher high, higher 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 low, higher high. Could we put in a higher low and continue? It's true. It wasn't Tyler S. I know who he is. I don't watch his channel much. It doesn't matter who it was. They're perfectly valid and right to be thinking this is a bump and run pattern. Actually, it's playing out exactly perfectly right now. Like if you would have long this, by the way, we were looking for longs at 74.9 to 74.6, but we were looking at it for different reasons because we were looking at this range. It was the value area low of this range and it was a 786 Fibonacci. But there's many different strategies to catch the same levels. Yeah, thank you, Arthas Salvatore. I appreciate the kind comments, man. I do. Okay, guys, I've been streaming now for about 3 hours. I do got to get going because I have some stuff to do this evening. I will be live tomorrow at 3 p.m. Eastern Standard Time. So that's my normal time. I usually go live 3 p.m. Eastern Standard Time. I'll be live tomorrow. Hopefully we can get a real nice, good live stream in. And by then we should have a little bit more data to know whether this pullback is going to start to look impulsive or not. For now, I still am watching that daily at 78,558 because our value area high is there of your previous range. And it's also your anchored VWAP from that previous range high. It's going to be there. And in the bullish uptrend, you really want to continue that. But just below that, the gold, I just deleted this. Golden pocket is at the POC of that range, 77.9, 77.7. If we start to lose those two levels, we could not only see a bigger pullback, we could take out 74.9 very quickly, and we could see a much larger retracement here. But thank you guys. Mamba, it's good to see you in here. Sorry that you're getting in right as I'm leaving here, but good to see you as always. Thank you guys all for your support, all for your kind comments. I appreciate it so much. Please do hit the like button on the way out if you enjoyed the live stream today, if you learned anything today. And remember, if you want to join the Telegram, because I do post in the Telegram, I try to let you guys know if Bitcoin's coming down to this daily level. I'll set an alert here right now. And we're starting to see a bounce for a potential low time frame confirmation for a long position. I will let you know. So to get into the Telegram, just join BYDFI using the affiliate link, deposit the minimum deposit of $100 or more. And then in the Telegram channel, you have to click the Telegram link and type in /verify and then your BYDFI user ID, and it will get you into the Telegram. And once you're in, you're in, guys. So thank you all so much. Thank you for the 4K subs, for real. So much of you in here are in here on an everyday basis. You make this live stream fun. You guys ask great questions. You guys are super supportive. I know that a lot of you really understand TA. Like a lot of traders in this community are real traders. You understand the levels. You understand the concepts. It is awesome to build a community like this. I appreciate all of you all so much. I appreciate my moderators so much. You guys are so grateful and helpful. I'm so grateful that you're so helpful to me in posting for me and helping keep out garbage when it's in here.